in terms of the kind of ratings that we can give the company based on 6 essential heads. Firstly, we're going to talk about the income statement, we're going to talk about the balance sheet check, as well as the return ratios too. And besides that, we're going to talk about the cash flows, shareholding, as well as street cred. Unfortunately, we don't have too much to go in for when it comes to the street consensus because, well, it's a newly listed company, and for the same reason, we won't have an update as far as your dividends are concerned. But I reckon that even these 6 parameters are going to give you a comprehensive update on how the company has turned out and possibly also the reason why it's moved the way it has. So Anushi, welcome to the show. Let's start off with how the revenue growth has been for the company as well as the profitability for KR and heat exchangers.
Agam, just by seeing the kind of street performance of this last 1 or 2 months itself, we can see that the investors in general, even the retail side, are very bullish on this counters. This can be reflected in their financials as well. We are seeing a 3-year revenue CAGR growth of 60% now. EBITDA also has seen about a 120% of a jump. The FY24 revenue stood at about 308 crore, but EBITDA stood at about 58 crore, and margins remained at around 18 to 19% of range. When we last spoke to them, also they expect their H1 was they started on a very stronger note, but they expect this momentum to carry on with H2 performance also in terms of margins and all and the revenue metrics that we are seeing. Net profit, if you look at 39 crore of FY24 was their net profit, in which they had clocked in about a 153% of a 3-year CAGR growth. So this is how the income statement check looks like, a big positive from all the key numbers that we are looking at.
Those are some staggering numbers. There's no doubt about that in terms of how things have panned out for the company over the course of the last 3 years. And if you consider how things have panned out for the balance sheet, the picture is no different. In fact, it's on a very, very strong footing. Remember that this company is considered to be a capital goods company. So, one might expect a little bit of debt on the books considering the working capital requirements. But what's really surprising is that that's not come through. In fact, while the company has an equity shareholders value of around 500 odd crores, that's its net worth, its gross debt stands at around 50 crores. But against that, the company has cash reserves around 350 crores. So this is practically, well, no debt. And even if you consider just 50 odd crores on a gross debt basis, that is also negligible in comparison to the kind of traction that the company is getting. So on the balance sheet front as well, it certainly is a thumbs up, very strong footing when it comes to the balance sheet. But, Anushi, we were talking about cash flows as well. There is some encouragement coming in here too.
Right. We are looking at some healthy cash flows also, while we are seeing what is happening over here. But I'll talk about the return ratios. You can take about the cash flows in one. Return on equity, if you look at, I'll take the FY24 numbers in picture. 41% of return on equity that the company had as of FY24 end. Return on capital employed was 31%. But do note that these are the FY24 numbers that we are looking at. Post the IPO, there has been a substantial change in their equity numbers, so we have to consider that. So strong numbers on ROE and ROC, but Agam, you were talking about the cash flow picture as well.
Absolutely, and cash flows have improved over the past 1 year. We just have data of what's happened in the previous financial year and what's happened now, and it does seem like we're looking at cash flows of around 34 odd crores against an outflow of around 6 odd crores, and this is of course year on year for the first 6 months of this financial year. So on an operational basis too, it does seem like it's on a stronger footing. But remember that we've seen a considerable improvement in the metrics of the company, which is explainable, and that's the reason why that is, as you can see there. Anushi, moving on to shareholding, how tightly is this company being held?
Very tightly held. In fact, 71% of stake remains with the promoters as we speak. So high promoter holding that we are looking at. Foreign institutions hold about 4.1%, while domestic institutions say about 7.4%. And with the recently concluded IPO and all that, we are seeing a 18% of a stake here. So again, this is also a very strong indicator with the management remaining highly invested in the company as we speak.
And that actually brings us back to how things have panned out for the stock since it's listed. So firstly, the stock has moved up around 81% since its listing back in October. It's in about 1.5 months, It's moved up and zoomed up and nearly doubled. But, as Anushi and I have been talking about, these are the many reasons why you have seen so much growth. And, the valuation picture is always going to be a little bit of a question mark. We don't have too much to go in for when it comes to dividends. We will know that in time. But I reckon that because the fact this company is in the growth phase, well, we may not expect too much in terms of dividend. That said, it's throwing up a lot of cash. So, I may even be wrong in that assessment. But overall, at least as far as your statements are concerned, it's on a very strong footing right now, and which is why we're rating this company 6 out of 6 parameters that we are discussing on KRN Heat Exchangers. So, one of the better IPOs to come about as far as the primary market is concerned. With that total score, with that perfect score of 6 out of 6, let's also talk a little bit about the strengths and the weaknesses of the company. So I'm going to talk about strengths and weaknesses. In terms of the strengths, of course, we have a long-standing business relationships as far as KRN is concerned, along with something like a Daikin, a Schneider Electric, also something like Kirloskar, Chillers and Blue Star. And these are all very well-established companies, So, well, they have partnerships with companies which also have a fundamental strong footing. Also, moving on, we have in terms of financial performance, where we've seen how things panned out, and the question is that the expectation of sustenance of margins, their operating margins, could only boost the company further. In terms of weakness, well, there are no long-term agreements with any of the clients or customers, but and their imports have accounted for as much as 78% of the raw materials. So they are dependent a lot in terms of their RM costs, and that could see a lot of fluctuation given the kind of traction that we've seen. As an example would be the kind of traction that you've seen in the metal sector on account of China and the kind of implications that it has had with respect to raw materials. And it relies heavily on Malaysia and Vietnam as well for several other raw materials. So that potentially could be a weakness. But Anushi, moving on to opportunities and threats.
So Agam, the biggest opportunity for this company is its subsidiary KRN HVAC Products, which has signed a 1,000 crore MOU with the Rajasthan government. While this is one of the pegs of the company's growth going forward, if we look at the capacity in this is set to expand by around 6 times by April 2025, which will take another 1-2 quarters to then stabilize, and from second quarter of next year, that is FY26, we can expect a strong set of revenue growth with the additional capacities flowing in. So just to give a picture on that, capacities which will in the next 3 years, their target is to take those capacity utilization rates to also 80 to 90%. Now, other than that, they're also focused on their increasing their export numbers, and these pertain to geographies like North America and Europe. If you look at the export numbers, that currently makes about 15% of their revenues. So another strong factor is the data centers. So we've all read reports, we've seen the kind of growth that there is in data centers, which currently contribute about 7% of revenue. So how that also plays as a leading indicating factor for the company is something that we should be watching out for. Other than that, we've spoken about these additional capacities. So with these additional capacities, they're also increasing their product offerings, which include bar and plate heat exchangers. But also coming to the threat side, it's important to highlight this also. You spoke about one was the import, the dependence on imports, about 78% coming from some of the key geographies outside. But in the threat side also, they have like 33% of their revenue from single customer, that is Daikin Air Conditioning, and 72% of their revenue from top 10 customers. So high concentration risk from their top 10 customers can be one of the factors that we should be watching out for. But other than that, even their top customers, if they plan to enter into the segment in which KRN is operating, could be one of the threats for the company's performance going forward. So this is the overall picture on the SWOT analysis also that we are seeing.
Absolutely. Well, I really hope that we've given the viewers a very comprehensive look on a very newly listed, very newly minted, listed company out there. Anushi, thank you so much for joining us and giving us those insights around the company KRN Heat Exchangers. So it's something to keep an eye on. Now, at least on the market capitalization basis, it's a relatively small one, but it certainly is one which has gained a lot of traction of late. So continue to watch out for that. In fact, let's take this conversation forward, because we spoke to the management of KRN heat exchangers earlier, and in fact we caught up with Santosh Kumar Yadav, the CMD at KRN heat exchangers, and here's what he had to say about the company's growth prospects going forward. Listen in.
We already talked in maybe before listing and after listing also. So our existing capacity, like we are doing almost 85%. So it's, you can say, almost full. So we like going for 6x expansion, and that's why we receive money from IPOs. Almost full money we are investing on this new expansion and adding new product, also expanding our existing product. So based on that, I think our investor maybe begins real growth. So that's why, honestly, my side I don't know how we received so good response. But from my side, we are doing a good effort, and we are want to deliver right product to our industry, best product, reliable product, and also we are want to expand our products to North America, Europe, as well as our domestic big OEMs.
Absolutely. Indeed, the market is very much optimistic on the expansion that you've mentioned. It's a 6x jump in the capacities that we are looking at, and this is through your KRN HVAC products that you're seeing. In fact, you've also made an additional stake worth about 236 crore in the company as we speak. Can you expand more about what this arm is, what is it concentrating on, what is its focus products, and the expansion which is expected to be completed by April 25. More on the timelines and what this is for the company.
So in IPO, of course, we claim 242 crore, but we are expanding slightly more in new entities, 100% subsidiary. So with the expanding our existing, almost double the capacity first go, and then adding new product for refrigerator industry. It's one roll bond, then fin and tube, and then wire and tube condenser. Additional to one of the new heat exchanger like bar and plate heat exchanger we are going to add, and we are also like backward integration, our sheet metal parts and header manifolds, that also we are going to add. So in club we call 6x capacity compared to our existing. And then main our target for this new facility, our domestic customer as well as North America customer and Europe side and UAE customer.
So, Mr. Yadav, you've mentioned that by April 25, we are looking to open this new facility, if I'm right, with the additional capex coming in for this. So, is it that the additional capacity which is coming from April 25 onwards, what would be the kind of capacity utilization rates that we are looking at? Because if we are to compare it from the previous 1 to 2 financial years, there would be a ramp up that we are looking for in terms of revenues, in terms of orders for the company. So if you can give us perspective on what is the kind of revenues and the order size that one should be looking out for.
No, like current capacity, we are doing almost a best one, but however this new capacity we are targeting to start from April 25th, and then it will take almost 4 to 5 months to settle the process, to hire the new teams and approvals from our customer side. So from my side, I think next year, half year, we will have good production, but for of course half year we will need times from approval from our customer side and set our process and manage the other things.
So can we expect by Q2 or Q3 of next financial year, this additional capacity would be on stream for the company, and from there onwards we can expect the higher orders coming in for the business and the higher revenue that you expect to generate?
Like for our existing product, we have already new customer in our pipelines, and some of customer we already received the approvals, but we unable to start supply because of capacity constraint. So for sure, existing product we will have ramp up very soon, from maybe next second quarter from next financial year. But for new product, of course, we will start with like small OEMs and aftermarket. Then we need some time from approval from our big OEMs. So as per my opinion, I think next financial year, 2 quarter will be like maybe ramp up plan, and of course next 2 half of the year we will have maybe good production.
And what are the utilization rates that we can expect from these additional capacity?
As of now, our trend is like that, we grow like if available capacity almost 50 to 60%. I think so same stream we will achieve after half year next year. Then we will have almost 50 to 60% each year. We will our target to growth on the same pattern.
So 50 to 60% in next financial year onwards that you expect?
And we are expecting in next 3 years, start from next year, we can achieve our 80 to 85% of total capacity.
This is for the existing capacity?
No, I'm talking about new capacity only.
Okay, so 80 to 90% of the capacity utilization?
In next 3 years, start from next year.
Okay, great. So from next 3 years, that is the perspective. Now, if you look at the revenues and the margins also, I'll talk about the revenue first. 28% is the growth rate that you've achieved in the second quarter. I want to understand from your sense that is this the level that we should be looking for the next half also? Because next year, as you speak, the additional capacity coming in and all that, so the revenue numbers would look much staggered, much higher than what is anticipated. So I wanted to get your sense for the next half as well as for the next 2 to 3 years.
Next half year, it will be same way because we are on the top of the capacity. And from when our new venture will start, so if we start from 25 to 26 half year, we need like approvals time, and then 25, 26 end of the half year we will have good production, and then we will achieve this. Our new facility will try to consume about 80 to 85%. It's 3 years.
Mr. Yadav, would it be possible to quantify the numbers for us?
I think numbers cannot quantify. Of course, capacity is the 6x, so numbers will be similar that way only.
And on the margin side, 20% is what the margins are currently. So with the additional capacity coming up, what is the kind of margin picture? Would that also remain as the forefront in the 20 to 21%, or can we see further upside also with your planning backward integration, as well as we are looking for higher economies of scale with more of these capacity coming in? So can we expect a upside on this margin numbers?
We are expecting slightly upper side. There will be multiple regions, like we are putting solar plant on the roof of the top. It's almost 8 megawatt. So it means our electricity cost will be less compared to existing. Secondly, we will target export side more, like North America market and Europe market. So our margin is slightly up compared to our domestic. Third, we will have like production side more, and we are doing backward integration also. So if I club is 2-3 regions, then we are able to increase some points compared to existing.
Absolutely. You've mentioned about the growing importance of exports also. Currently about 15% of your revenues come from the export side. So, and you are planning to increase your export opportunities in countries like North America and Europe. Can you emphasize more on the export opportunities and what are the type of products that you're looking for? What is the competition scenario like when on the export side of the business?
Like with the existing fin and tube type heat exchanger, we are trying to, like as of now, last half year, we achieved almost 19% of the export. And for new facility, we will try to at least 50 to 60% to North America and Europe. So there will be also multiple region, like North America, they have anti-dumping on Chinese product, particular on our segment, almost 25%. Secondly, now our cost benefit to them is around 10 to 15%. So many customers, they are approaching us, and of course we want to start, but we will start from new facility. So it will like impact to our new facility. Mainly we are targeting to this facility like single piece flow, and we are buying new machinery with latest technology. So this facility will be, you can say, one of the best facility in India with solar plantation, green building and new technology machine. So of course North America side and Europe side, the customer need some good facility, and of course we will invite them, and then we able to target to them in well condition.
Absolutely. And Mr. Yadav, with the entry of Trump now as the president for USA, what does this mean for a company like KRN Heat Exchangers? Are we seeing, is it on the positive side? Are we looking at this entry coming in for you? Can you expand more on that front also?
My personal opinion, I think Trump is better on our product. If I had like experience on last, so he put like anti-dumping on Chinese product. So if they want to, we want to like compete with Chinese products. So for as a Indian supplier, particularly in heat exchanger, so I like look seems like a positive side, of course. but I am think he putting duty on Mexico. So Mexico also one another place. They are like targeting to USA market on cheap products. So it's also good news on our product. But I feel if he will put some anti-dumping on our product, but it will be less compared to Chinese. So I think it will be better for us.
Okay, so a positive side that we are looking for this announcement. Now, I want to understand from you, what's the road ahead? You've mentioned about the capacity expansion that is happening, the new products that would be in focus post this. But for an investor, if he wants to look at the next 2 to 3 year picture for KRN, what are the 3 important metrics that one should be considering when looking at the company as a business perspective? And what are 1 to 2 points according to you which can also be as the challenges for the business that we can point out? So it's on the basis of what are the good and the bad that one can look out for KRN.
So good side, if anybody like study our history, so I'm like first generation entrepreneur only. So we started 6 years back only, and we like in the last 6 years, each year we bought new plot. We are expanding our capacity and we target peak OEMs, and we succeed on that the same. So based on that, now we are going for 6x capacity, and this you can say like my old facility, I can say it's the optimized facility, but now we receive good money, and based on that we are targeting one of the best facility in the world for our product. And then we have like same trend we will going to achieve in future as well. So that's why we're expanding 6x capacity, which really is from my side, I receive an inquiry from like my customers, so they need such type capacity in India. So based on that we design our facility, and of course we are targeting to them, and they are like some customer already visited us, and of course they really appreciate on us. A negative side from my side, I think there is nothing from my product. Of course, force major is there, and some government policy like BIS certification on the import material they are putting, and that other side like Trump or maybe Chinese, some policy will change, so maybe they will put some anti-dumping. Right. So that I feel negative side, but the rest all is positive side.
Well, that's some very interesting commentary coming out from the management of KRN Heat Exchangers. We've also spoken about the kind of traction that some potential tariff hikes from the US could impact the company, and the management seems to suggest that they're not immune to it, but it will be less as compared to several other competitors across the world. But as you can see, at least in terms of how the company has done so far, it's a 6 out of 6 in terms of the parameters that we spoke about. Of course, with that, we are also at the end of this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit, and we will keep bringing you more.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with
Hello and welcome. This is Hot Money on NDTV Profit. Of course, all the focus currently on the RBI, MPC and everything the governor has said. Let's quickly though try and see how markets are responding. And there has been a bit of a response. Let's pull up the Nifty 50 and the intraday will likely show that you're seeing a bit of a recovery in that sense where markets are concerned from the lows of when the policy announcement actually started. We've seen a bit of a recovery. Nifty just about flattish. When you're looking at some of the other indices, can we pull up the Nifty Bank as well? The Nifty Bank has seen a very healthy recovery in comparison because the CRR cut definitely aids banking counters. The CRR cut will mean that at least around 1 lakh crore rupees worth of funds sitting in banks doing nothing, earning 0% interest because that's the cash reserve ratio they are essentially required to maintain, now moves straight into slightly higher yielding instruments. Something as low as even a money market fund would technically earn banks a higher return than a 0% of course. And then a lot of that money will also go out and start getting lent out as loans, and therefore loan growth will start to also revive. A couple of factors that will likely play out. Something like a Citi, if we can pull out the CRR numbers, a 50 basis point rate cut, Citi was expecting that a 50 basis point rate cut will likely impact banking numbers by around 2 to 3 basis points in terms of margins and around 0.8 to 1.5% in terms of operating profit. So both of those metrics will start to hopefully revive, but that will only happen in Q4 because as you can see, 2 tranches of decreases with regard to the CRR, 25 basis points on 14th of December and 25 basis points on 28th of December. And that will ensure that Q4 will see a bit of a margin uptick. As a result of only this, hopefully no other changes in the pipeline, and therefore that will likely impact the Q4 numbers for banks. You can see as a result, Bob being the biggest beneficiary, Axis also within private banks being one of the top beneficiaries, PNB, SBI, those are the 3 banks we highlighted even yesterday, that in case of a CRR rate cut, those 3 banks will be the best placed in terms of the impact that they will see of the rate cut. ICICI Bank, Axis, some of the other private names also come into the fore on the back of that. So the Nifty Bank doing well and showing some resilience due to that. Let's pull up some of the other sectors as well. The Nifty IT not doing as well today after the kind of push that we saw with regard to how it performed yesterday. But also let's try and understand that the Indian rupee will likely be more resilient due to the fact that the repo rate has been left unchanged, and that will mean that IT will have a softish kind of a day because a weakening rupee always favors the Indian IT industry. Not seeing that weakening likely, but let's also understand this a little better. Reserve Bank of India left rates unchanged, maintained a neutral stance, and a positive surprise when the central bank announced a cut in the cash reserve ratio by around 50 basis points. Vishy is here, but actually we also have live visuals coming straight from the press conference which the RBI hosts post the MPC, and you can see that press conference just about beginning, and we'll probably give you a live feed straight as soon as the RBI governor starts speaking. He'll obviously give us his takeaways, and thereafter the media will ask questions to him with regard to the policy and what they see. It's going to be interesting to understand how sticky inflation is going to be. He's of course hiked the inflation expectation, really trimmed the growth forecast in a big manner. How confident is he of that 6.6% kind of growth is going to be interesting to hear. All of that likely will get discussed as part of this presser. But growth coming off, and what the policy rates will and how the policy rates will play out as a result of this pullback with regard to growth, how quickly will we see rate cuts, and why haven't we already seen it, is going to be something that hopefully we'll get more insights on as part of this press conference. There you go, live visuals coming straight to you. Let's go straight to it.
Post monetary policy press conference. Friends, we have with us Governor Reserve Bank of India, Shri Shaktikanta Das, Deputy Governor Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Dr. O.P. Mal, Executive Director, and Executive Director Dr. Rajiv Ranjan, and other colleagues from Reserve Bank. Sir, to begin with, I would request you to make your opening remarks. After that, we'll have the Q&A, please.
I would like to, in the beginning, make five observations. First, number one, the MPC remains committed to restoring the balance between inflation and growth, which has got unsettled recently. Two, the Reserve Bank will use its various policy instruments to create the conditions for restoring the inflation growth balance. Three, the credibility of the flexible inflation targeting framework needs to be preserved. Four, inflation has to be brought down in the interest of sustainable growth. Five, prudence, practicality, and timing. I repeat, prudence, practicality, and timing will continue to be the guiding principles for the Reserve Bank's future actions. It is all about dissection of the inflation growth conditions and acting accordingly. Timing of actions is the key. Thank you.
Thank you, sir. Before we begin, I'll request the media friends present here to wait for their turn. You may see my colleagues on the aisle. They have the mics with them, so they'll give you the mics, and please speak in the mic because otherwise you'll not be audible to outsiders. And in interest of time, as I always say, please restrict to one question per person. And if time permits, we can consider the other one. Sir, there are 24 participants from media today, and with your kind permission, I'll start calling out their names. So I'll start with Mr. Yogesh from Doordarshan.
Good afternoon, sir. Thank you for the opportunity. Sir, despite the reduction in the GDP forecast, the rates are basically maintained. The status quo is maintained, but the CRR was reduced by 50 basis points. What was the thinking behind that? Thank you.
I think I have explained it elaborately in the statement which I presented earlier today morning. And as regards growth, the second half of this year looks better than the first half. The first quarter of this year, there were issues of, that coincided with the election season, countrywide election. Probably that affected, in particularly government expenditure. Second quarter, the reasons for the slowdown we have explained. Monsoon, continuing monsoon rainfall also affected activities, particularly in mining, in electricity demand. Manufacturing also was slow. So I have explained why we expect the second half to be better this year, better than the first half. And on inflation, I have also given a path. We have also given a roadmap. So we need more credible evidence that things are happening the way we are expecting. That the direction of developments, the direction of evolving conditions, the outlook is playing out in line with our expectations. And then, as I have just now mentioned, it's a question of timing. You have to appropriately time your actions. When there is a time for a particular action, be it rate cut, be it liquidity action, be it whatever is the action, they have to be well timed. They have to be timed in a manner keeping the outlook in mind, and also action has to be taken when it is really going to be most effective and impactful.
Thank you, sir. Next we'll have Mr. Manojit Saha from Business Standard.
Thank you, sir. Let me ask something which is there in everybody's mind. Have you heard anything from the government so far, whether you are continuing this term, at least informally, before the policy meeting started? I will have one more question today. Yes.
Is that your only question?
No, I will have one more.
No. Let's stick to monetary policy. Please ask your question on monetary policy. Otherwise, you will miss your chance on asking a question on the monetary policy. So you choose which one you want to ask.
Okay, since
it's your choice.
Okay.
I'm willing to answer the first question also, but it's your choice.
Okay, please answer the first question then.
Okay, I'm not giving you any headline, and I think it's better we stick to monetary policy. Thank you.
Thank you.
Thank you,
but
sir.
You can ask your main question, please.
The question I wanted to ask also is, how did you get the growth estimate so wrong for the Q2? You projected 7% even in October. It came out at 5.4%. So what exactly went wrong in the projection?
I would request Deputy Governor Michael Patra to take that question.
There is a lot of commentary on that already in the press. If you look at the demand side, the main problem is investment. On the supply side, the main problem is manufacturing, and the two are intertwined. In the manufacturing, the biggest issue is the slump in the sales growth, and that is reflecting inflation hitting the urban consumer. So when sales growth is down, companies do not want to invest in new assets because they see demand as moderate, and it can be met from existing capacity. Since they don't want to engage in new capacity creation, investment is down. So the underlying slowdown in growth is because of inflation.
Thank you, sirs. I'll now request Mr. Ankur Mishra from ET Now.
Good afternoon, Governor. I want to understand the inflation scenario which you have explained. You are also maintaining that in Q4 the situation might be slightly better, while in Q3, the upper side risk remains. Last time you had mentioned about the horse bringing back to stable. What is the scenario now? Is it the scenario that a controlled trot may continue, or you see that you need tighter reins to control the horse?
The horse has made a very valiant effort to bolt. Our effort is to keep it in tight leash.
Thank you, sir. May I now ask Mr. Vishwanath Nair from NDTV Profit?
Good afternoon, Governor. The first question is, you mentioned that if growth continues to linger lower, then you may need policy support. You're admitting that Q2 was looking weaker, even though the rest of the financial year may look better. Your cut on the growth projections is sharper than your hike on inflation projections. I still want to understand why then the status quo, because it's clear that you have a growth bias in your commentaries.
No, whether I have a growth bias or inflation bias, I think it's for you to interpret. But if you recall, before I presented my statement, I made some extempore opening remarks where I have exactly explained our approach. Why monetary policy is important, what exactly is the mandate given to the Reserve Bank. In the Reserve Bank of India Act, the provision is very clear. And our effort is always to follow the legal provision, the mandate given to us, both with regard to inflation and growth. Our effort is to follow it in letter and spirit. There is no, in the life of a central bank, there is no scope, there is no room for knee-jerk reaction. We need more credible evidence. We need more evidence with regard to how the outlook is likely to be. And based on that assessment, the effort is always to take action in time. Whatever action, I'm not talking about rate cut or again. But whatever action we take, it has to be well timed. And it depends on the outlook. No room for knee-jerk reaction. Because you take a certain knee-jerk reaction which you may have to reverse. So you should not, one should not regret. But let me tell you very clearly that our effort has always been to remain in line with the curve, never fall behind the curve. And I think we are maintaining that trend.
Thank you, sir. अब मैं जी बिजनेस से श्री ब्रजेश कुमार से आग्रह करूंगा.
सर, जैसा कि हर बार यही होता है कि इन्फ्लेशन को लेकर जो चिंता होती है कि फूड इन्फ्लेशन एक बड़ा कंपोनेंट होता है जो चीज़ों को डिस्टर्ब करता है आपकी टारगेटिंग को. एक डिबेट ये भी थी इकोनॉमिक सर्वे में कि क्या फूड इन्फ्लेशन का कंपोनेंट हटाकर फिर टारगेटिंग को देखा जाए. तो इस पर सवाल ये है कि क्या सप्लाई साइड को दुरुस्त करने के लिए सरकार से आपकी किस तरह की कम्युनिकेशन हाल फिलहाल में हुई है कि ये चीज़ ठीक हो. और जो इकोनॉमिक सर्वे का एक व्यू था कि फूड इन्फ्लेशन को हटाकर टारगेटिंग की जाए, उसको लेकर कोई बात?
इसी सरकार के साथ हमारा क्या डिस्कशंस होता है मैं आपके साथ शेयर नहीं करना चाहता हूं, लेकिन आपको ये कहना चाहता हूं रेगुलरली हम सरकार के साथ डिस्कशन में रहते हैं इन्फ्लेशन को लेकर और सप्लाई साइड मेजर्स के बारे में काफ़ी इंटरनल डिस्कशन रहता है. तो उसके बारे में मैं बाहर कुछ बोलना नहीं चाहता हूं. और जहां तक आपने इन्फ्लेशन टारगेटिंग फ्रेमवर्क और फूड इन्फ्लेशन की बात आपने वो सवाल उठाई, मैं आपका ध्यान आकर्षित करना चाहता हूं कि शायद अगस्त पॉलिसी में मैंने विस्तृत रूप में एक्सप्लेन किया था कि हेडलाइन क्यों टारगेट होना चाहिए और फूड इन्फ्लेशन को हम लोग क्यों इग्नोर ना करना चाहिए. रिजर्व बैंक ऑफ इंडिया एक्ट में जो प्रोविज़न है उसके अनुसार हेडलाइन इन्फ्लेशन हमारा टारगेट है. हम अपने मर्जी से कभी कोर इन्फ्लेशन को टारगेट नहीं बना सकते हैं, कभी फूड इन्फ्लेशन को टारगेट नहीं बना सकते हैं, कभी फ्यूल इन्फ्लेशन को टारगेट नहीं बना सकते. वो जो है वो लॉ में रिजर्व बैंक ऑफ इंडिया एक्ट में लिखित रूप में है, उसको हम फॉलो करना चाहिए. और हमारे पास वो मतलब ये डिस्क्रेशन नहीं है कि हम अपने मर्जी से कभी इसके ऊपर कभी उसके ऊपर ध्यान दें. जो लॉ है उसको हम फॉलो करते हैं. थैंक यू.
धन्यवाद सर. नेक्स्ट विल बी मिस लता फ्रॉम CNBC.
Thank you, Pani. Sir, you couple of times you have said that the growth inflation balance has gotten skewed and you have to restore the balance. Does it mean you were skewed in favor of growth and you're going back to inflation, or was the balance skewed in favor of inflation and now it will become pro-growth? How do we understand this skew question? And just a word on CRR, is that is only going to take care of the liquidity that has already gone away from the system. Q4, we are still staring at cash withdrawals, possible dollar inflows and RBI dollar sales. So do you still have OMOs or any such thing on the table?
You see, whatever action we have on the table, I will not be able to spell out. It will depend on how the situation evolves. We expect in the next few months, we expect tight liquidity for reasons which I have explained. One is that we expect the tax-related outflows from the system, both direct tax in the middle of December and thereafter the GST. Together with that, there is a possibility of likelihood of increase in currency in circulation because the busy credit season, agricultural activity has now picked up and that requires cash. That will merge into the harvest season also, which requires cash. So the currency in circulation is also likely to go up. And then there have been a significant amount of capital outflows in the months of October and November. That is, outflow of forex has happened because of FPIs exiting. So therefore, with regard to your point about dollar inflows, that is something which is difficult to quantify at the moment. Our assessment is that liquidity conditions will remain tight. And let's also bear in mind the fact that the CRR increase was done sometime, I think if I remember correctly, in April 2022. I think in that policy we did it. It was a temporary measure. It has served its purpose. It was time to normalize it. And with regard to growth inflation balance, I didn't say skewed, I just said unsettled. And I think in the statement I have used a different word. So basically what we mean is that last time we had said that growth inflation balance is well poised. Well poised means the growth looked good for that quarter as well as for the whole year. Inflation outlook also, we were aware that September and October inflation prints will be higher. But as you know, September and October, because of weather factor and other factors, food inflation went up very steeply. September numbers were broadly a little higher than what we had estimated. October also we had expected it to be high, but the actual number came a little higher than what we had estimated. So therefore inflation, was more than what we had expected, little more. And growth also has moderated. The numbers are, we have we have given the numbers. So the well-poised character of the dynamics between growth and inflation, that has got somewhat unsettled. Our effort is now to restore that balance, which basically means that we want inflation to be brought down closer to the target. We want growth also to pick up, and I think our assessment also shows that growth is picking up. So we have to be very watchful. We have to maintain that that balance between growth and inflation, and that's it. Thank you.
Thank you, sir. Next we'll have Mr. Mayur Shetty from the Times of India.
Thank you, sir. My original question was on this GDP coming as a surprise, but Manojji's already asked that. My other question is on, during your term, there have been a couple of crises, and RBI has coordinated with the government at that time, and that has worked very well, the coordination. So now that uncertainty is constant, do you think there is scope for continuing this coordination, given that, like you said, the inflation mandate is enshrined, and there is an expectation from the government that there should be a focus on growth? and also you all do not give any forward guidance on your actions. So, do you think there's any forward guidance on your actions? So, do you think there's more scope for coordination?
No, I think coordination has been there, coordination is there, and coordination will continue to be there. So that is a constant process, and it continues. And whenever we have any thoughts or any concerns, we always share it with the government. That engagement and coordination continues. In fact, in one of my recent speeches in an international seminar which we organized in Mumbai with the participation of, I think, the central bank governors from the south, I had highlighted the importance of fiscal monetary coordination. So that is very important. It has proved its mettle, it has proved its strength during the stressful times of COVID, and thereafter when the Ukraine war started and inflation suddenly spiked. So coordination continues.
Thank you, sir. Next we'll have Ms. Swati from Reuters.
Thank you, sir. So we've seen growth numbers come down sharply. The 5.4% was a shocker. You also revised down your growth estimates for the next 2 quarters, whereas inflation is high. Is it fair to say that India is now in a stagflationary phase? And also looking at these growth numbers, is the trend growth for India coming down from the 7.5-8% levels closer to 6.5? Is the trend growth for India much lower than what we have been talking about?
I will pass on this question to Deputy Governor Michael Patra, but I would also suggest that, there have been so many other announcements, some very important announcements in the, in the part B of as part of our additional measures. So I think maybe some questions on that would be useful, for the wider audience which is watching this this press conference. Go ahead.
So I explained why there is a slowdown in GDP growth in the second quarter due to a special set of factors. Now, it's not, I think, appropriate to make a judgment on the trend rate on one data point. So what was expressed as 8% was not a trend. It was just the average from 21 to 24. And all over the world, for every country, the projections that are being made for 25 and 26 are implicitly correcting cyclically for the rebound from the pandemic for all countries in the world. So even when we made our initial projections, they were not at 8%, they were 7.2. And also in the monetary policy report, we gave a projection for 26, which was the same cyclical correction. After this correction is over, it will revert back to a trend, and we are yet to see the data points of that trend. What the governor has been saying is that the average between 21 to 24 was 8%. Now, if you see the second half of the year's projections, there is a reversion back towards an upper rate of growth, 6.9, 7.3, and that continues into 26. So we are hopeful that we will reach that level again.
Thank you, sirs. Next we'll have Ms. Hamsini Karthak from Money Control.
Hi. What exactly was the rationale for reducing CRR? The question here is in the context of, in absolute terms, we don't have a liquidity deficit as such. And if I were to look at it from a banking perspective, I would think that a CRR cut would allow banks to ensure that they don't have to compromise much on margin versus a repo rate cut at this point in time, given that profitability of banks has also sort of been under the weather for the last 3-4 quarters. Was that also a thought process that you had in your mind when you initiated the CRR cut? And as such, the bank lending is also anemic. So do you believe that this will spur up or free up some more money for them to lend, increase the lending?
You see, the CRR cut I have just explained a little while ago, we have normalized it. And it was time to normalize. It was a temporary measure, so we have normalized it. What the banks do with the CRR money is entirely their call. Whether they use it for giving credit or whatever purpose they want to use, it is their call. And with regard to liquidity, it is surplus today. It is surplus today, perhaps on Monday, next week also 2-3 days it is likely to be surplus. But we clearly see that, we are going into a phase where liquidity is going to be very tight in the later part of this month, December, and continuing into January and perhaps, into February. So we thought it was time to sort of normalize the CRR levels. And the other questions which you mentioned about, banks, some other these things, we don't make monetary policy or liquidity decisions keeping in mind the balance sheet requirements of banks. Our policies are governed by the growth inflation dynamics. Our policies are governed from the point of view of maintaining overall stability of the economy. Whatever issues are there in the banks, etc., that is dealt with through the supervisory arm of the Reserve Bank.
Thank you, sir. Next, I'll ask Mr. Ashish Agashe.
Thank you, sir. Sir, what prompted the FCNR-B measure, sir? Last time we saw upwards of $30 billion coming in after some relaxations. This time, is there some bit of idea of how much incremental money would flow in? What are your expectations?
These measures are intended to enhance the capital flows, and that has been clearly articulated in the circular. There is a scope for foreign non-resident Indians or eligible Indians who are eligible to invest into the FCNR-B to increase their deposit base in India, and that is purely what has been contemplated at this point in time.
And it's a temporary measure, which is there till 31st March.
थैंक यू सर. अब मैं ईटी नॉर्थ स्वदेश के श्री अनुराग शाह को आमंत्रित करूंगा.
धन्यवाद पुनीत सर सवाल पूछने का मौका देने. सर, इन दिनों चर्चा में है कि जो बैंकों के द्वारा इंश्योरेंस का कारोबार किया जा रहा है उसको लेकर वित्त मंत्री ने भी हिदायत दी है, और हमने देखा है कि कुछ प्राइवेट बैंक, सरकारी बैंक जो है इंश्योरेंस कंपनियों में हिस्सा खरीद रहे हैं. तो वहाँ पर कुछ मामलों में RBI मंजूरी देता है, कुछ में नहीं देता है, और कई सारी जो इंश्योरेंस कंपनियां वहाँ पे बैंकों का 50% तक भी हिस्सा है. तो क्या RBI केस बाय केसेस पे ही वो हिस्सा मंजूर करता है या फिर कुछ नियमों में बदलाव किया है? और दूसरी तरफ जहाँ पर देश में इंश्योरेंस का पेनिट्रेशन बढ़ाना है और बैंकों की बड़ी भूमिका है इंश्योरेंस के पेनिट्रेशन में, लेकिन कोई कंपनी जो काफ़ी बड़ी है जिसको कोई बैंक नहीं खरीद सकता, वहाँ पर रिजर्व बैंक की तरफ से केवल टेम्परेरी मंजूरी दी जाती है बैंक में हिस्सा खरीदने पे. तो क्या उन नियमों में कुछ अभी बदलाव किया है? और सर, अभी जो आपने अपने स्टेटमेंट में बताया कि अब पॉडकास्ट शुरू करने वाले हैं, कम्युनिकेशन का भी नई स्ट्रेटजी होगी, तो उसका क्या मकसद है, किस ऑडियंस को टारगेट कर रहे हैं?
आपने बहुत सारे क्वेश्चंस पूछ लिए. मैं फर्स्ट
नहीं सर, वो पॉडकास्ट वाली नई इंटरेस्टिंग चीज
नहीं, बस वही तो मैं कह रहा था. बाकी चीजों के बारे में भी सवाल पूछना जरूरी है. आप डिप्टी गवर्नर राजेश्वर राव जी इसके बारे में रिप्लाई देंगे.
आपने जो आपने इंश्योरेंस के बारे में पूछा था, फॉर्म्स ऑफ बिजनेस के बारे में हमने एक ड्राफ्ट सर्कुलर पुट आउट किया है, जिसमें व्हाट इज द परसेंटेज ऑफ होल्डिंग, व्हाट टाइप ऑफ बिजनेस जहाँ पे बैंक्स इन्वेस्ट कर सकते हैं उसके बारे में लिखा है. तो उसके आधार पर फ्यूचर एक्शंस विल बी टेकन और रेगुलेटरी एक्शंस विल बी टेकन ऑन दैट बेसिस. So we are waiting for feedback on the forms of business circular, and that will guide us in the way we look at investments into subsidiaries or associate companies of banks.
आपने भी हिदायत दी है, जिस तरह से वित्त मंत्री ने बैंकों को हिदायत दी है, तो आपने भी जो मिस सेलिंग हो रही है प्लेटफॉर्म पे उसको लेकर कुछ
नहीं, इसके बारे में हमारा ऑलरेडी एग्जिस्टिंग इंस्ट्रक्शंस है. देयर आर क्लियर इंस्ट्रक्शंस. जो हमारा बैंकों के लिए जो डायरेक्शंस या इंस्ट्रक्शंस कुछ भी कहिए वो ऑलरेडी एग्जिस्टिंग है, उसमें कुछ नए करने की ज़रूरत नहीं है. लेकिन हमारा सुपरविजन के द्वारा हम ये चेक करते हैं जहाँ पे जो अपना RBI इंस्ट्रक्शन से डिविएशन होता है उसमें हम कार्रवाई करते हैं. देखिए, पॉडकास्ट एक न्यू इंस्ट्रूमेंट है. इट्स बिकम वेरी पॉपुलर नाउ, एंड आई थिंक व्यूअरशिप स्पेशली जो है यंगस्टर्स में बहुत वाइड है. तो इसीलिए RBI वी वांट टू रिमेन इन टाइम्स रिक्वायरमेंट ऑफ द टाइम्स. कहीं इसमें वी इन दिस मैटर ऑल्सो वी शुड बी अहेड ऑफ द कर्व. सो it's basically a communication tool to communicate with wider cross section of the people. There is sometimes it may be necessary not to give a detailed interview. Sometimes it may be necessary not to do a press conference. you want to talk on a particular issue, some new measure has been announced that needs to be explained to the people, podcast will help in those kind of things.
Dhanyawad, sir. Next, we'll have Mr. Anup Roy from Bloomberg.
Sir, you said that the growth slowdown is probably over. Next half's growth will be better. But at the same time, you are saying that inflation pressure will be there, probably more than what we have witnessed. Are you indicating that February rate cut is also very risky?
I have not indicated anything about the future cycle of interest rates.
Thank you, sir. Next, I'll request Mr. Sachin Kumar from Financial Express.
Sir, the growth in unsecured loans, it has come down significantly in the past few months. So, but now there is one pocket of gold loan where the growth is very strong. So, do you think is it a cause of concern, and it may also warrant the same kind of measures to curb that growth?
I would request Deputy Governor Swaminathan to take that question.
See, the growth in unsecured loans at that point in time when we took some additional macroprudential measures last year was essentially to curb the exuberance that we saw in that particular segment, so that any possible stress or a risk build-up is avoided. So that was the intention with which we took that step. Otherwise, in terms of what should be the product mix as to how the banks should drive their business is purely a business call, and gold being a collateralized loan, the banks and NBFCs have shown a preference to grow. What is more important for us is to ensure that there is fairness in their conduct towards the customers, and then the appropriate norms relating to LTV, income to repayment obligations, etc. are being adhered to in a fair and transparent manner. So our instructions are more aimed towards ensuring orderly conduct of this business. Growth or product mix is something which is essentially left to the bank's wisdom to pursue.
Qualify as an exuberance according to you?
There are no golden numbers to determine as to which is less or which is more, and also you'll have to see the percentages in reference to the base. When we talk about almost 175 lakh crore of bank credit, what is the proportion that the gold loan of a lakh plus crore constitutes? So percentages at times can look different, but what is more important is whether the portfolio is being built in a responsible manner, in a prudent manner. So that is what we would keep watching. But in any case, we remain watchful of the incoming data, and if some prudence demands that we should initiate some action, we will take it at the appropriate time. At this point in time, the guidance in terms of the conduct would suffice is our view.
Thank you, sir. Next, may I request Mr. Piyush from Hindu Business Line?
Good afternoon, Governor, DGs. Thanks, Puneet sir. Governor sir, first question is with regard to Sachin sir asked about gold loans. My question is on MFI. A lot of MFI companies are seeing higher delinquencies, creating higher provisions. Is the RBI concerned about SHGs? Somebody mentioned only 6 months also they don't have any experience, but they still get loans. So in MFI sector, are we seeing any incipient stress building, and what are your views on that? And so separately, what gives you the confidence that current fiscal 6.8% GDP growth can be achieved, the revised projection that you have done? Because November, we saw 6%, 7% fall in UPI transaction. I know it's not a only indicator, but month on month, it's fallen 7%, and it is a month of festivals. So these are the two.
No, you see, on the gross number, I think I have explained it elaborately in the statement, and now also I have explained. Now, what gives us the confidence or no confidence? I think it's for you to assess whether our numbers for the third quarter are realistic. We have made our assessment, and we look at multiple factors. It's not just UPI is just one of the factors. But on the other part of your question on MFIs, I would request Deputy Governor Swaminathan to reply to that question.
Yeah, these are some of the segments in which, as we spoke last during the course of MPC as well, there are certain segments we saw increased slippages in the Q2 numbers that were emerging. And as we mentioned earlier, it was not very surprising to us because these were the segments which saw an outlier growth an year before, and we had taken some proactive measures on that. And we had also, if you recall, in the August monetary policy statement, Governor has said that in these segments where enhanced slippage is being witnessed, we have requested the banks and NBFC to strengthen their underwriting standards, and B, to step up on their collection efforts to ensure that the stress does not translate into NPAs. So on the same theme, we continue to engage with the entities wherever we see any outlier behavior. At the system level, it is still not a big concern. About 20-30 bips uptick in stress is something which we are confident that the entities will be able to handle. And in certain entities where these particular numbers are a little outlier, we deal with them on a bilateral basis, examining as to the steps that they are taking up to ensure that the stress is not widespread. And the third, of course, through the SRO, there are enough levers that are available to us to ensure that the self-regulatory organization in this particular space, in the MFI space, are taking adequate steps to sensitize their members to adhere to the prudential guidelines of Reserve Bank and ensure that the household income assessment and the repayment obligation towards the net monthly income, etc., are strictly adhered to. And as Governor said earlier, to avoid the push effect, just respond to the demand rather than give loans to achieve someone's target. So I think these are 3-4 key messages that we have managed to deliver in the last 2-3 months. I think that should be good enough to ensure that the balance is restored in this particular segment.
Yeah, please.
On the PI numbers, I think we shouldn't read too much. There was an oversized increase last month because of the way the festivals fell this year. So that got corrected for this month. So I expect that the trend will continue going forward.
Thank you, sirs. Next, I'll request Mr. Laltendu Mishra from the Hindu.
Good afternoon, Governor. US President-elect Donald Trump has reportedly threatened to have tariff barriers on BRIC nations like India. Will it impact our exports or is it a matter of concern? Thank you.
No, it is. We have to, first thing is, let's not prematurely, let the policy come. And so far as the BRICS, you're referring to the BRICS countries in the context of the BRICS currency and all that. You see, sorry? Yeah. So now the BRICS currency was an idea which was raised by one of the members of the BRICS countries, and it was discussed. No decision has been taken in the matter. The geographical spread of the countries also is a factor which has to be kept in mind. Unlike the Eurozone, which has a single currency, then they have geographical contiguity. BRICS countries are spread all over. That also has to be kept in mind. And with regard to the dollar, de-dollarization, etc., there is absolutely, so far as India is concerned, there is no step which we have taken which specifically wants to de-dollarize. All that we have done is that we have permitted opening of Vostro accounts, and we have entered into agreement with couple of two countries by now to do local currency denominated trade. That is basically to de-risk our Indian trade. Dependence on one currency can be problematic at times because of appreciation or depreciation. So as a part of de-risking our trade, that is a step which has been taken. Nothing, de-dollarization is not our, certainly not our objective. It's not on the table at all. I think it's more of a narrative which is being said in some sections of the media. Our effort is basically to de-risk our trade. Nobody is talking about or thinking about de-dollarization.
Thank you, sir. I'll request Ms. Sangeeta Mehta from the Economic Times.
Thank you, sir. Sir, could you share your thinking behind the introduction of SORR that you have spoken in the policy? And sir, could you give some idea on the timelines for the draft guidelines, because almost 4 of them are already being talked about, the project finance, LCR and ECL, climate finance. Could you give some idea when they would be?
SORR, I think you can answer.
So as of now, we have two benchmarks which are set out by the FBL. One is the MIBOR, which concerns uncollateralized transactions, and we have the MROR, which is based on the market repo. But the TREPS, which is 60% of the market, is not in that index. So this index that we will have now will capture all secure transactions. That's the limit.
And on the other part, I would request DG Rajeshwar Rao to give the reply.
Guidelines are fairly major game changers as far as the banking system is concerned. So we have got significant feedback on all these guidelines. Those need to be carefully evaluated, and we will calibrate the way these guidelines are rolled out. So I think there is, but we are in the process. We are close to finalizing some of the approaches. I will not give a definite timeline.
No,
we
let's
will
see.
do it as fast
We
as
have
possible.
followed a very consultative approach. These are all, they will bring about significant changes in the banking system. So we are, proceeding on it. These measures are necessary, but we have to proceed in a very careful and calibrated manner, in consultation and taking into account, not in consultation, but taking into account the suggestions and other issues, which have been raised by the banks and several other stakeholders. So we want to move very carefully, very cautiously, so that when implemented, the implementation is as non-disruptive as possible.
Thank you, sirs. Sir, with your permission, two more questions. Yeah. So I'll request Mr. Ben Jose from New Indian Express.
Hi, sir. Hope to see you announcing the next policy, sir. And congratulations for the 6 years of tenure. And Patra, sir, we will miss you at the next policy. My question is what Laltendu asked about. It's a further building on that. The rupee has been under pressure, and if the Trump tariff war happens, say 10% on Indian exports, and what could be the impact on the rupee going for if the tariff war happens?
I'll take that question.
The tariff hypothetically, if it happens, will not be an isolated event. There will be other events around it. Like, for instance, they say that perhaps China may react by devaluing the currency, or there might be retaliatory tariffs. So at this point, it is very difficult to say what will be a unilateral move and a unilateral effect. Let us wait for the general equilibrium effects.
Thank you, sir. And lastly, I'll request Mr. Siddharth Upasni.
Thank you, sir. Afternoon, Governor. A couple of months ago, there was a paper co-authored by you, Dr. Patra, saying that the rate hikes since May 2022 have negatively contributed to growth by around 160 basis points. So has too much growth been sacrificed to reduce inflation? And are those rate hikes and the retention of the repo rate at 6.5%, is it expected to continue impacting growth going forward? And second, on FCNRB, is the FCNRB limit increased to reduce the pressure on RBI's forex interventions? Because the monetary policy and forex management policy has been at sort of odds. The interventions have drained out a lot of rupee liquidity. So is that also been a consideration? Thank you.
I think since the paper was authored by Dr. Michael Patra, I think he can reply.
So I'm happy that you've read the paper, but I do hope you've read it carefully. What it says is that the cumulative rate increase of 250 basis points reduced inflation through aggregate demand by 160 basis points. But inflation fell from 7.8% in April to 3.8% recently in August. So of the 320 basis points, only 160 is due to monetary policy. Okay. Now, in the same paper, you will see that there are charts which show the impact of an interest rate change on output and inflation. The impact on output starts after the rate increase and reaches its peak in the third quarter after the rate increase. It plateaus in the fourth quarter. And after that, it fades away. So if you take the cycle of rate hikes, the cumulative peak was in July-September 2022 in terms of quarters. So take 4 quarters from there for the effect on output. July-September 2023. So after that, output starts to rise back. The effect on inflation lingers for 10 quarters. So by now, output has started to go back and it has actually crossed what we call its potential level. So to ascribe the growth slowdown of the second quarter to that is, I think, stretching the case too far.
Sir, one last question. So, Ms. Gopika, you would like to ask, right? Yeah, you can please speak in the mic.
Yeah, I mean, just adding to his question, is that a concern? I mean, was that a consideration, the forex reserves, given that we had seen, the kind of outflows last 2 months, and more is expected. The market is expecting a similar quantum of outflows the next few months. What is a consideration? Is that a consideration behind coming out with the FCNRB hike? And also, will there be more measures to sort of protect the currency? And my second question, sir, on usurious rates, RBI has raised a lot of concerns around usurious rates. Now, the Reserve Bank has followed a principle-based regulation and has removed any sort of caps on interest rate lending rates. But given the kind of concerns that are rising in the industry, MFIs, unsecured loans, is there a need to define a boundary or a threshold in terms of lending rates?
You take that thing, or you will take? Usurious you will take. But before that is FCNRB, let me say, first thing I want to say that our forex reserves are quite robust even now. And the depletion in the reserve, which has happened in the last few months, part of it, and a good part of it, is because of valuation losses. Still our reserves, the latest print, I think we gave out 656 or something like that. I don't remember the number exactly, but reserves are still, forex reserves are still quite adequate. We are confident of dealing with any spillovers. Now, you mentioned that is Reserve Bank concerned about outflows and all that. You see, somebody said that key inflows are expected. So how the forex market will behave going forward, we cannot really sort of, we cannot make a guess. We cannot really assess. We have to see there are so many uncertainties. New administration in the US that will take over, the response of other countries. So it's a very dynamically evolving situation. So as per requirement, we will take action. And so therefore, at the moment, we have no concern at all. It is a facilitation which we have provided to attract more, more inflows and an opportunity for NRIs to invest. And I actually lost a bit of, because your question, 2 questions so long. Is there anything else you asked in that FCNRB?
Will there be more measures?
No, about more measures you will have to wait. I can't spell out now. More measures as and when they are required, we will take. But on the FX front, let me say very clearly and emphatically that our forex reserves are strong, and I have, I think, devoted 2 paragraphs in my statement to explain the rationale for RBI's forex management. The focus is not just to deal with spillovers. It is an essential part of Reserve Bank's policy to build stability of the macroeconomic stability and financial stability of the domestic system.
Thank you, sir. Sir, so this is the end of question. Would you?
Oh, sorry, there is a user.
Yeah, maybe. See, as you would recall, Reserve Bank, after extensive consultation, has deregulated the administered interest rates, and this freedom has been placed with the boards of the banks and NBFCs. And we have also said that the boards are expected to use this freedom placed in them in a prudent and sensible manner to ensure that their pricing practices are not considered usurious, whether it is pricing or fees. And we have also said in the same regulation that this will be subjected to supervisory assessment. So, basis such assessment over the last couple of years, wherever we have found such practices, where we found that the customer interest was in danger, and the decisions were more driven by profit motives rather than securing customer interest, we have called out such entities. As Governor mentioned, we have had extensive discussion with multiple entities. Many entities have taken measures themselves to correct the situation, and a few entities which were considered outlier, we have singled them out for supervisory action, which we will anyway going forward review subject to they rectifying their position. And the third part of your question is in terms of are we having a rethink? I don't think at this point in time we still expect the industry to correct itself and use the freedom placed with them in a sensible manner so that their business grows in a responsible manner, ensuring fairness in their conduct and fairness to the customers. That is what we will continue to push at this point in time. Thank you.
Thank you, sir. Sir, would you like to?
So, before we conclude, there was one announcement which I made about this mulehunter.ai. I thought there will be a question on that, but since it's not there, but to disseminate the information to the wider audience, people who are viewing this broadcast, I would request Deputy Governor Ravi Shankar to very briefly explain that.
Thank you, Governor. Thank you also for intervening so that I got a direct question after a long time. No, the Mule Hunter is basically an infrastructure level setup we are creating, which will use the databases from all banks, all other payment system operators, and its AI engine will be trained based on this wide set of data to be able to identify frauds, etc., much more effectively in the financial system. If you look at frauds, the number of frauds are increasing, the amount involved in frauds are increasing, although number of frauds per transaction is coming down over the years. But the number is increasing fast enough for us to be concerned about it. I just wanted to clarify one point with respect to Mule Hunter, because there was some talk about it, that any entity, any payment system operator, any bank, any credit card network, every entity is free to use their own fraud detection systems. They will probably be used over and above this, and every individual is free to in fact innovate based on their own expertise, their own AI engines and so on. Reserve Bank's idea of introducing this Mule Hunter is to create an infrastructure level facility which others can use. With many participants, many small banks, etc., cannot devote enough resources to develop such systems, can actually use this. Even for the well developed ones, this is a base which everyone can use. Thank you.
Thank you. I think before my colleague Puneet Pancholi concludes, there is just one information I want to provide. This is about the RBI 90 quiz, which we started in which we launched this year. So as you would be aware, we had launched the RBI 90 quiz in August this year. This was a nationwide quiz for undergraduate students as part of the commemoration of the Reserve Bank's 90th year. I am happy to say that there was an overwhelming response to the quiz. We are holding the national finals today at 2:30 p.m. in Mumbai. It will be live streamed on Reserve Bank's YouTube channel.
Well, so many interesting takeaways coming in. More so that the RBI will be patient with regard to where inflation is concerned, and no knee-jerk reactions coming from the RBI just due to the fact that growth has slowed down. In fact, they believe growth not necessarily slowing down because rates are higher. So plenty coming through. But with that, out of time on this edition of Hot Money. Stay tuned for all the news and updates. We'll continue to pour all of those your way on the other side. Thanks so much for tuning in.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
No rate cut. RBI Governor Shaktikanta Das says the Monetary Policy Committee is in wait and watch mode as they attempt to balance inflation and economic growth. More liquidity in the banking system. This was welcomed by the markets and economists. The Monetary Policy Committee decided to stagger rate cuts for cash reserve ratio, that is CRR, by 50 basis points. Inflation remains stubborn. The RBI has hiked inflation projections for the current financial year from 4.5% earlier to 4.8%. The battle against mule accounts used for money laundering continues. The RBI announces an AI tool which will help to reduce the AI digital fraud. Well, hello and welcome to NDTV Profit here, watching Market IQ. My name is Rucha Somaya and we'll quickly begin looking at the markets. But before that, our big headline for today is the decision from the RBI's monetary policy. Here are the 5 key takeaways from RBI Governor Shaktikanta Das's speech. Number 1 takeaway is no rate cuts. The RBI governor said that the MPC has voted 4:2 to keep the rates unchanged. Takeaway number 2, the RBI has also decided to keep a neutral stance in order to watch inflation amid and also ensure growth. Takeaway 3 is that the RBI has lowered GDP growth projection to 6.6% from 7.2% earlier. And takeaway number 4 is that the inflation is projected to be higher at 4.8% from the expectation of 4.5% earlier. Well, the governor said that the last mile of deflationary period has quote long and arduous unquote. And the takeaway 5 is that the CRR, that is cash reserve ratio, has been cut to 4% from 4.5%, and this will inject more liquidity of over 1 lakh crore rupees into the banking system. Well, the cash reserve ratio is the amount of money that needs to be set aside by the bank to be able to pay out deposits. Well, the markets reacted almost instantaneously to the RBI governor's speech. There was a sharp dip when the governor announced that the rates were unchanged. Some minutes later, when he announced that the CRR, that is cash reserve ratio, will be cut, the markets took heart and surged again. Take a look at how this played out.
The Monetary Policy Committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate. To ease the potential liquidity stress, it has now been decided to reduce the cash reserve ratio, that is to reduce the CRR of all banks to 4% of demand and time liabilities, that is NDTL, and this will be done in 2 tranches, 2 equal tranches of 25 basis points each.
Banker Rajiv Anand said that he expects a rate cut of 50 basis points in the next cycle. Well, this is due to what he calls a palpable slowdown in the economy. Listening to what he had to say.
The problem that we've seen so far is, on the one side, we have certainly, like I mentioned to you, the slowdown in the economy is palpable. But on the other side, we are certainly seeing inflation being quite sticky at this point in time. We need to see those inflation numbers, come down into the 4 handle before we can even think about a rate cut. So I think the RBI's own expectations is that we will see a inflation number in the vicinity of about 4% sometime in February. So the earliest expectation that we have as far as the rate cut is post-Feb. But having said all that, I think the rate cut cycle itself is going to be quite shallow at the very best in this sort of an environment. We don't expect the rate cycle to be more than 50 basis points, which means that the 6.5 could at best go to 6%.
Well, my colleague Vishwanath Nair is at the RBI headquarters and he breaks down what the RBI's decision mean to you and me. Over to you, Vishy.
So you just heard the RBI governor talk about the latest monetary policy announcement. Here's 5 key takeaways that we at NDTV Profit are bringing to you. The first one is that there is no rate cut. So as far as interest rates are concerned, it is a status quo policy. Repo rate continues to be at 6.5%. What does that mean? Well, essentially your or my interest rates on loans as well as deposits are not really moving anywhere. The other part, the second takeaway is that the RBI and the MPC have maintained their stance at neutral. Now remember that till before the last policy, the stance was at withdrawal of accommodation, which means that all the accommodations that the RBI and the MPC had made during the COVID era those were being withdrawn. So now what the MPC is saying is that we are in a neutral stance. Essentially, we are not committed to any kind of rate cut nor rate hike. Depending on the evolving situations, we will take the next call. The third important takeaway is that the RBI has lowered its own GDP forecast. So GDP forecast earlier was 7.2%. That has been lowered to 6.6%. This comes on the backdrop of a weaker than expected Q2 GDP number. And there is hope that at some point in time in the second half of the financial year, the government will boost some amount of consumption, some amount of spending. It will also, there is also going to be some amount of agricultural produce, which is going to again boost the rural economy. So growth will come up, but maybe not as much as what was originally anticipated. The fourth key takeaway is on CPI inflation. There, the MPC and the RBI have decided to up their projection from 4.5% for the full financial year to 4.8%. What does that mean? Well, essentially, the RBI is saying that in Q3, that is the October-December quarter, you will likely see food prices keep trending higher, and therefore you will see overall inflation trending higher. But eventually, as the Kharif crop comes in, these prices will start to tinker down, but that still has a bearing on the overall number for the financial year. That's why from 4.5 to 4.8%. The last key takeaway and probably the most important news of the day is the cash reserve ratio being cut. Now, what the RBI is saying is that we will be cutting the cash reserve ratio by 50 basis points in two tranches, so 25 basis points each over the course of December. This will boost the liquidity in the ecosystem by about 1.16 lakh crore. What does this mean? Well, essentially, banks will have more money and they will have a less of a funding crunch, which means that credit availability for you improves. Hopefully that translates into some amount of interest rate benefits, but that part may not actually happen. What will probably happen is that banks are slightly more comfortable and your access to credit remains as easy as possible.
Well, thanks for that, Vishy. But to talk to us more and to give us some more insights on the RBI meet policy takeaway, we are being joined by Kaushik Das, who is the Chief Economist of India and South Africa at Deutsche Bank. Well, thanks for joining us, Mr. Das. And in addition to him, we also have Mr. Dheeraj, the Economist and Strategist at ANZ Research. Well, thanks, gentlemen, for joining me. And with me is my colleague Pallavi, who tracks the economy very closely. My first question to you, Mr. Dheeraj, well, this one to you. What do you make of this outcome which has come this morning?
Well, look, I was in the rate cut camp for today. The idea was that the growth slowdown, which is underway, is sharper than expected initially. So, of course, there is a requirement for policy support, and that is the stance I maintain even now. So, I do think that while the CRR cut was quite welcome from a liquidity perspective, the rate cut is possibly getting delayed to February, but not later. And I do think that the growth outlook is still optimistic as far as the Reserve Bank of India is concerned, and growth will likely undershoot even their revised assessment. And I think that warrants policy support. So yeah, 25 pip rate cut in February, three rate cuts in total. But as of today, welcoming the CRR cut, I was hoping that a rate cut also happens, but better late than never.
All right, thanks for that, Dheeraj. But coming to you, Kaushik, thank you so much once again for taking time out to speak to us. But any quick thoughts, any quick summarization of today's events, broadly in line with your expectations, right?
Yeah, hi Pallavi. It came just in line with our expectations. Even before the GDP data came out, our view was that the CRR should be cut. And the reason being that, you were seeing some tightness in liquidity in the system because RBI was intervening in the FX market. And, we knew that, in the next few weeks, we'll have advanced tax outflow, currency circulation leakage. My calculation is about 1.6 trillion INR will flow between December to March. So there'll be tightness in liquidity. And we think that RBI will continue to intervene in the FX market. So in order to take care of domestic liquidity and be consistent with the neutral stance, first what you needed was to cut the CRR so that domestic liquidity doesn't tighten too much. You've done the change of stance to neutral in October. The next logical sequencing should be to cut the CRR and make the liquidity a little bit more comfortable. And then you follow it up with a repo rate cut in February or April, depending on the data. But this is the sequencing that we expected, and RBI, delivered on that today. And we are not surprised at all. I mean, it came in line with our expectations. I think Governor Das talked about timing, being the key of any decision. And I think the CRR cut has come at the right time. Going forward, I think you will get a repo rate cut. Typically, in the past, 20-year period, different cycles, the maximum that RBI has held on between the end of a rate hike cycle and start of a rate cutting cycle is 11 months. So this has almost become, 2 years. And part of the reason is because the Fed delayed its own rate cutting cycle. So to that extent, I think beyond this, it could have a little bit of problem on growth going forward. RBI will be forward looking when it comes in February. And at that time, it will look at inflation being at close to 4%. And even, growth, if you get 6.5%, it is still below potential. And therefore, RBI will have justification to cut the repo rate in February, in my view.
Okay, so, taking that forward, Kaushik, so, you've spoken about how growth might still be below potential. Now, I do want to understand, what are you making of economic activity currently? Is the worst behind us? Even the governor alluded to, bottoming out of high-frequency indicators in Q2. Broadly, we're all expecting a better second half to the fiscal. So, in terms of growth as well as inflation, would it be fair to say the worst is sort of behind us?
Yeah, so the broad view is that the 5.4% number that we got, that is probably, the lowest that we've got. Going forward, it will be better than that. And there could be some upside revisions to that number as well. We know that GDP number tends to be very volatile, and the revisions, often are pretty meaningful when it happens. So remember that October-December GDP number comes out in end February, and it will come with all kinds of revisions to the past numbers. So all these numbers can change. Now, the issue is that RBI has given a 6.6% forecast for the year, which would require, second half growth to be about 7%. I would not say it's impossible. It is possible because we are seeing, kind of economic indicators taking a little bit of upward move from what we've seen in September. October was much better than November, but overall, I think we can still get to 6.5%. Maybe 6.6 is a little bit too much. But the number that RBI has given for FY26, 6.9 and 7.3% in the first half, I think those are slightly on the upside. Those could have downside risk. The broad story is that if you still manage to grow at 6.5, 6.7%, that is below potential growth rate of the economy. And, different people have different estimates for potential growth, but most people believe that potential growth rate for India is 7% or slightly higher. So from that perspective, if you have growth coming below potential as an average for the year, and you have inflation coming towards 4% in the next 3 to 6 months, monetary policy should always be preemptive and forward-looking. So when you come to February and you take a call for the next 3 quarters, I think that will be a good enough time for the MPC to decide to cut the repo rate. Already 2 people have moved for a rate cut from 1:5 earlier. I think in the next policy you will have a rate cut from the MPC.
I have a doubt there, Kaushik. So you've spoken about how we're still looking at below potential growth, right? But another camp is also of the view, right, that so far we were seeing some benefits from post-pandemic recovery, and now we're looking at growth normalizing. So, how do you sort of view that as, and what is potential growth rate in the current scenario then looking like? Are we still looking at potential growth rate of 7% or do you think that figure is now slightly lower?
No, so when we came out of the pandemic, we thought that the potential growth rate has fallen, and that's why we thought RBI's neutral real rate should be lower at about 1%. RBI themselves came out with a calculation of 1%. Then what we realized is that the potential growth rate has not fallen that much because of the supply side reforms and a lot of changes that have happened in the economy. So probably potential is still 7% or higher. And that is probably one of the reasons why the core inflation trajectory was coming down when RBI hiked rates. tightened liquidity, came out with macroprudential norms. If indeed the growth was more than the potential growth rate, then core inflation should have gone up. So to that extent, we think the potential growth rate is still 7% or higher, and that hasn't kind of got affected that much. Compared to that, if you take care of all the noises and the idiosyncrasies that are there in the GDP data, deflator, I think we are growing below potential. And the point that you made, what happened was after COVID, a lot of growth support came from the urban side, and the rich people in the urban areas, supporting growth. Now, those people who have made luxury purchases of a property or a car, they're not supposed to do it every year. So those 2-year period of spending that had happened, I think that has kind of slowed down. So that incremental slowdown is reflecting on consumption growth. Rural consumption is improving on the margin, but that cannot offset completely the slowdown in the urban consumption. Therefore, overall, you are seeing growth coming down to 6.5% odd number, and that is lower than the potential. And the problem is that next year you have the global backdrop, probably, which could become more challenging. Exports could become an issue if tariffs are imposed. So taking all that into consideration, our growth estimate for next year is also 6.5% FY26 compared to RBI's at 7. And that's why we think some monetary support is required, particularly when the government will keep on consolidating the fiscal deficit towards 4.5% next year.
All right, Dheeraj, coming to you, like Kaushik just mentioned about, the fact that we might require some monetary support. You've also spoken about possible requirements for some policy support for growth as well. Do you think there's requirement for some fiscal policy support, especially given what we've seen consumption trends to play out as now, even when we are seeing signs of some sort of a rural recovery, now it's urban consumption that's, growing at a slower pace. On what basis can we even expect that to then flip?
Look, at the moment, I don't think there is a very strict imperative for fiscal to push for urban consumption. It's a cyclical slowdown. Let's sort of understand that first. And business cycles happen always. So I don't think there is a strong fiscal imperative to push urban consumption higher. In fact, I would still think that the imperative for the fiscal should be to lower the fiscal deficit further. So I would advocate for the government to stick to the fiscal deficit reduction path, even in FY26. Having said that, I see the support for monetary policy as being more important at the moment, because whether it's business capex or the real estate cycle or urban consumption, these are all to some extent interest rate sensitive sectors which may have felt the burden from higher real rates as well as macroprudential tightening of the recent quarters or in the recent past by the Reserve Bank of India. And as it appears in high frequency indicator that the real estate cycle or the construction cycle looks to be peaking, urban consumption has moderated substantially, and wage growth does not seem to be very encouraging for the outlook on private consumption growth. So I think at the moment, monetary policy is where we need greater adjustments than the fiscal policy. But at the same time, I would also acknowledge that, coming off a very strong base and a period of very strong years, strong growth years, this is perhaps reflective of a cyclical correction, which is usually inevitable.
All right, guys, this is Vishwanath Nair joining in. Kaushik, I want to ask you, so I hope you've not answered this already, but the one point that the regulator, the RBI governor mentioned very clearly was the fact that they feel that they have been right in line with the curve, they've not been behind the curve at all, and that they do not want to take any knee-jerk reactions just by reading one growth number. Having said that, do you agree that maybe the RBI has been with the curve or maybe behind it? What's your assessment looking like?
So I think, today's decision of cutting the CRR and not cutting the repo rate immediately, I think that's a very, very prudent and timely decision. Because if you had cut the repo rate immediately, it would have also signaled that you are panicking, that growth has kind of fallen completely and you are kind of going to stay in that trajectory for a long time. When you're saying that your growth will improve over the next few quarters, this was maybe a temporary kind of number and not this kind of low numbers are expected. I'm not saying growth hasn't slowed down. We have been arguing for a long time that growth is slowing down, but nobody expected growth to be this low. But this looks like more of an aberration going forward. Maybe we'll not hit the RBI's numbers, but growth will still be quite decent compared to global standards and compared to India's own growth as well. But the point is that today what they needed to do was first take care of the liquidity, because unless you have sufficient liquidity in the system, even if you cut rates, you would not have effective transmission of those rate cuts into the real economy. And this also gives time for RBI to kind of be sure with their assessment whether inflation will actually come down to the extent that they're hoping. Our guess is it'll come down, but I think RBI wants a little bit of confirmation from the data that the worst is behind for inflation as well. What we saw in October at 6.2, November we're expecting around 5.6, and then incrementally it comes down towards 4% in the first half of next year. Similarly on growth, if they think that growth is kind of improving, but maybe not to the extent that they had hoped earlier, then taking both these things into consideration, they can consider cutting rates in February. And monetary policy, as I keep on saying, is always forward looking. It's not about just the growth rate that we are getting now. It is about taking a call that 2 quarters or 3 quarters down the line, or maybe even a year down the line, what would be the growth number, what would be the inflation number without any monetary policy support. And if you believe that those numbers could be much lower without monetary policy support, then you need to start easing 3 quarters before, and not wait till the time growth has fallen quite low and you are behind the curve. So I think RBI is on ball, and February would be a good time for RBI to cut the repo rate once they have already cut the CRR in December.
Right. Dheeraj, I want to take this question with you. The FCNRB announcement that came from the RBI. Now, during the press conference, reporters did ask that, does this take the pressure away from the forex reserve spending that they've been doing, the depletion that has been happening? The RBI governor and the deputy governor sort of played it off as a lot of it is because of valuation losses and not necessarily only because of rupee intervention. I just want to get your view, how effective a tool is FCNRB as far as managing the forex situation is concerned?
Look, if the situation was really dire and we needed a lot of that foreign capital to come in, maybe that would have been an effective tool at the margin, giving that required boost to the reserves. Right now, the situation is not such. I mean, reserves have fallen, of course. They're sharply lower the past few weeks, but they're not at a level which makes you very nervous. But I do acknowledge the fact that the drawdown in the reserves, whether it's because of valuation effects or actual intervention, coupled with the fact that the RBI's forward book is looking so stretched on the net short side, tells me that the pressure on the rupee has been substantial. And it's understandably so. Not only our external headwinds were against the currency, so to speak, but after a very long time, after several years, even the domestic pull factors, are not working in your favor. Growth has slowed, inflation has remained sticky, current account is widening, even if it's manageable, equity markets are taking a bit of a beating. So I do think that when both your push and pull factors are not working in your favor, the pressure on the currency can be sharp, and possibly the only way for USD INR is higher from here, maybe even in quicker adjustments that we have seen in the recent quarters. So coming back to the question on FCNRB, in such a situation, it may marginally help, but I don't think it would be a strong tailwind that can really offset the kind of depreciation pressure that we have seen in the rupee in the recent weeks.
Right. Thank you so much, gentlemen, Kaushik and Dheeraj, for those insights. And I thank my colleagues Vishwanath and Pallavi as well for joining this conversation. But that's all that we have on the show for now, viewers. It's from me, Pallavi, Vishwanath, and the team who has put this show together. Thank you very much. Do stay tuned to NDTV Profit. Lots more action on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Some of the most memorable experiences in my life have been when I have traveled. I'm sure this is true for you as well. There's something life-changing about pushing the boundaries of what you've been comfortable with, meeting new people, and seeing how they live. And when you've done it once, even if you don't have the restless feet of a seasoned traveler, your heart seeks out that feeling again and again. The thing is, travel is not something that everyone can afford, but it's something to work towards. Thanks so much for tuning in to MoneyWise. I'm Alex Matthew. On today's episode, I want to help you put some items onto your bucket list and also talk about how you can check them off. My first guest today is someone you may recognize. She's probably already helped you plan some of your holidays. YouTuber, explorer, travel expert, Tanya Khanija. Thanks so much for joining me on MoneyWise.
Thank you so much, Alex, for that lovely introduction. And I'm so happy to be on the show and talking about the one thing that I absolutely love, which is traveling.
So I do want to tell our viewers what this is all about. Of course, this is going to help them put a few places that you visit, and you've gone to so many places, but you're going to narrow it down to just about 5 locations that you think that everybody should visit.
Yes.
And you're also going to tell them about a few travel hacks, but that's just in a bit. But yeah, I know that I asked you to drill it down to 5. Was that difficult to do?
It was probably the hardest thing I had to do this morning, because some of the destinations, I think at least the list that I'd sent to you are some of my favorite countries, some of my favorite places, because I feel travel is one of the most transformational experiences of life, and once you get hooked to it and you experience it once, you realize just how much it can change who you are as a person, the kind of people you meet, the friends you make for a lifetime, even though you just probably talk to them on a video call or something once in a while. But still, it just feels like a very cozy, warm, fuzzy feeling inside of you, and you want to do more of it. And these destinations are very close to my heart, and I think our viewers are going to be really surprised and their minds are going to get blown with the kind of details I have for them today, especially, I think, the hacks for how you can save on travel.
Absolutely. So let's kickstart this list. I think Norway is on top of the list. Tanya, why is this making the list? First of all, it's not something that people would normally think of as something to put in their bucket list, right?
Yes. But when I visited Norway, I was so surprised with everything that it has to offer, because it's very close to the North Pole. So you could say it's within the Arctic Circle. At least the northern side of Norway is within the Arctic Circle. And this year, 2024 and 2025 happens to be these are 2 of the best years to see the northern lights. So for our viewers who are not aware, the Aurora Borealis, which are these dancing lights in the sky, green and red and beautiful magical colors. And there are only 8 destinations in the world from where you can see them. But Norway tops the list for me because of also the kind of experiences you can have over there. Imagine being in a yacht and seeing the northern lights from the middle of an ocean.
Fantastic.
Or going for a whale watching tour in a boat with somebody who's really close to you, maybe your partner, maybe your family, and you're packed in multiple layers, but you can see snowy mountains pass you by, and everything is so pristine over there. It feels otherworldly.
And the fjords are really famous, but it sounds expensive, Tanya. Is it?
It is one of the more expensive destinations for sure, but I think something that has to be on everybody's bucket list, like I said, at least this coming year. And if you plan in advance and you plan it really well for, let's say, the end of 2025, it is something that I think people can afford with a little bit of planning.
Okay, so how much would it cost? And give us a sense of how many days you would normally spend. What would you do?
Okay, so I would say you can also go for a shorter trip, let's say a 4-day trip to just Tromsø, which is the Arctic capital of Norway. And if you spend just 4-5 days over there, 3-4 days, I would say, to begin with, to maximize your chances of seeing the northern lights, even that could be enough. And you could plan it in a way that you maximize a lot of these activities that you get to do, like I said, the whale watching and seeing the fjords, going for a fjord tour, or even dipping in ice cold water in a sauna. I think that should also be something on everybody's bucket list. But on an average, it could cost up to 3 lakhs per person to visit. And if you plan it really well, let's say if you're not renting a car and if you're just staying in one place, or if you're just booking a lot of tours or group tours to minimize your budget, it can be done and you can see some beautiful things over there.
But 3 lakhs with the airfare?
With the airfare, yes.
Shifting to a completely different location from the north to the to the east of Asia, we go to Japan, right? And a lot of people have probably considered it because of the kind of depreciation that you've seen in the yen.
Yes.
It's made things a little cheaper from that perspective.
Yes.
Why is it on the bucket list though?
Japan is such a unique destination. I think most people call it the most futuristic country in Asia. And I won't disagree. I think it has such unique things to offer, from Tokyo, which is obviously quite futuristic, but also how traditional it is and very similar to India, I would say, in its cultural and family values. The way people are so close-knit within each other and how polite they are. The whole experience of Japan is, I think, one of the favorites from my 2024 travels. And I've been to a lot of countries in 2024, but I think Japan stands out for me so much, especially because I went during the cherry blossom season.
Yes. And which is when?
Which is, it's from March to April. In the beginning of April, it's on the lower side, but I have a very good tip for people actually.
Which is?
you know how the country stretches from north to south, right? And most people only go to the south side of Japan. So they'll probably go to Tokyo, Nara, Osaka, Kyoto, or maybe even Hiroshima or Mount Fuji at most. But if you hit the north side of Japan, that is where you get to see cherry blossom in mid-April, which is not which does not happen in the south anymore. In south, it ends by end of March, and you can, if you go to the north side, it's one of the most beautiful cherry blossom you'll ever get to see. And nobody hits these places because they just hit all the popular destinations.
So in the north, where would you go? And okay, so how many days would you spend in Japan? How much does it cost?
I would say a 14-day trip could cost you. For a little lesser than 10-day trip could cost you 1.5 lakh per person. Okay. If you do it on a budget.
So
actually,
that's really cheap.
Yes, and that's how much I ended up spending in Japan with flights. And I booked my flights a little bit in advance.
Are you serious? But you're talking about a real budget. You're not spending on luxury hotels, obviously.
I do not spend on luxury hotels, and hotels are the only expensive commodity you could say in Japan, because each night could cost you about 10,000, 15,000, at least in Tokyo. But the rest of the destinations, especially north, was not that expensive.
Oh, okay.
And I also got a JR pass, which is the pass for taking all of these bullet trains, and you normally get a 7-day pass. So if you're going for a 10-day trip, you spend the first 3 or the last 1 day traveling or taking the JR pass. But when you do have that pass, you can actually take unlimited number of bullet trains, and you can hit any destination you want to. So don't stay limited to just these popular destinations. You can actually go to the north, you can come back from north, hit the south. And if you plan it really well and understand how to use this pass, you can hit so many nice destinations.
A few places to hit in the north?
Okay, I went to Hirosaki, and that is where I saw the most magical cherry blossom, and there were no tourists over there. Nobody from the West, nobody from India, only Asian tourists, probably just from Japan or Korea, because they know where to go to.
So I know that we spoke about a certain number before, but I could spend endless amounts of time talking about the places you could go to. Let's run through the last 3, right? Because we've got Peru, we've got Oman, Zimbabwe, and we've got Oman.
Yes.
Why would these 3 be on your list?
Okay, Peru, because I think it's a great entryway into South America. Of course, it's pretty far away from India, but it's again a really popular destination, and I think one that's on every traveler's radar. So we've got Machu Picchu over there, we've got the Rainbow Mountains, some amazing hikes. You can actually do the Salcantay trek, or you can do the trek to Machu Picchu. So beautiful treks, beautiful hikes, amazing destination, so much to see, so much culture to experience.
It's tough to get there though.
It's a little far away to get to.
Yes.
So if you'd ideally want to take probably a 30-hour flight to get there, which can get long for a lot of people. The way I went there was that I went to the US first, which was a direct flight, and then I flew down from there to Peru, and I got it during the season where the flights from US to Peru were pretty cheap. So overall, because I broke down my trip a little bit, it became a little more convenient. But again, there are a few challenges, like if you don't have the US visa, if you're directly flying to Peru, then it's a pretty long flight. And
so therefore, in this situation, you want to keep more days, right?
Yes, you want to keep at least 14 days to be able to see the country properly. And of course, people must have that kind of time on their hands. But again, a destination that is on every traveler's radar, and one that I would absolutely recommend if you want to go to South America.
And how much would it cost you? 14 days?
I would say, because the flights are expensive, it can shoot up your budget to about 3 lakh per person. Or if your flights are cheaper, like in my case, I think because they were lesser, it cost me a little less than 2 lakh for the entire trip, 14 days. So,
and this is not extravagance. It's simple.
It's very simple. I mostly, in fact, stayed in hostels, and I probably did it for a little lesser than that. I don't have the exact number, but it was okay. It was manageable. For a solo traveler as well, it was manageable.
A couple more. Zimbabwe first.
Yes. Okay, Zimbabwe is another destination that I went to this year, and beautiful. Not many tourists visit again, and Indians, I don't think, not many. But the kind of experiences I had over there, we started from Victoria Falls, a helicopter ride over Victoria Falls, and these are the largest waterfalls in the world right now. You see the sheer volume of it and the chasm of water, and it falls into like a little, a ditch in earth. So it feels like a U-shaped hole in the earth, like what do you say?
A trench.
A trench, yes. And the waterfall falls inside it. And you have multiple viewpoints from the Zimbabwe side to see it, almost 16 viewpoints where you can see it from, and it's blew my mind. And then we did a self-driving road trip through Huanghe National Park, which is a national park filled with so many actual animals who living in the wild, like lions, giraffes, and elephants, so many elephants. And you just see elephants by the road. We stopped at this viewing point where we saw real lions just having their...
This was on a safari?
On a safari. Just two girls, just the two of us. We stopped at a viewing point, and just probably 30 meters in front of us, there were lions who were just eating for the day, their hunt, their spoils of the day. And then also we stopped at a place where just next to the road, there was a beautiful lioness just sitting over there. And there was also a point where I was constantly telling her that, you know what, elephants are not to be disturbed in the wild, because they can actually attack you, and they're very fast. They run at 30-40 kilometers an hour. So if you especially spot a rogue elephant, be very careful. But then soon after having this conversation, we had this whole herd of elephants just crossing us with little baby elephants. And oh gosh, it was scary and thrilling at the same time.
I can imagine.
And there was no cell reception in this park, but there were rangers, of course, every once in a while. But it felt like a real thrill, because we weren't doing a dedicated safari, we were just doing the whole drive by ourselves. And it was an amazing experience, especially for people who are thrill seekers, who are really adventurous. I would highly recommend this place.
But how much is it costing you?
All right, so this trip cost me about 1.6 lakhs in total. And it was completely split with my friend. So if two people are traveling, the car rental becomes a little cheaper, because we also rented a 4x4 to be able to drive across the country. And we hit a straight route from Victoria Falls to Harare. So it was a complete route, and it was really nice.
And how many days?
It was, again, I think 14 days.
Okay.
Yeah.
Okay, so one last destination, but we're going to have to run through it very quickly.
Yes.
Oman. And people are reasonably familiar with this. Muscat, everyone's heard of. What drew you to that place?
Okay, I took up a challenge that I want to do a really, really, really budgeted trip. And this was a challenge that I took for myself because I was traveling solo. And believe it or not, including flights, I ended up spending just 50,000 on this entire trip.
I'm sorry, I don't
for 10
believe
days.
you.
I know you're not gonna believe me, but it is surprisingly cheap, and the kind of things you get to do over there. So there's a place called the Maniat Islands near Muscat, and you take a day trip from Muscat to go to this place, and you get to snorkel with a bunch of turtles, which are huge.
Wow.
And I went snorkeling with more than 30 turtles for the first time in my life.
It's an incredible experience.
Yeah,
I had the fortune to see a turtle once.
Oh,
it's
you
amazing.
did? Okay. And that mostly on most of my scuba dives or snorkels, I get to see one turtle.
Yeah, I saw one turtle.
Yeah. And over here, there were more than 30 just floating all around me. And the water was so clear. In fact, if you see some of the drone footage of this area, it may look like Maldives to you because the water is so clear, but it is Oman. And then not just that, I also went to some of the destinations in the south side of Oman, and beautiful country. I think if you just can plan a road trip across Oman, it can be an amazing experience. I saw some bioluminescence near the beach towns of Oman. So at night, literally went swimming in the water. I was camping with my friend, and we were at this pink beach, and we went swimming in the night. And as we moved our arms, it was just blue water because it was glowing with bioluminescence. Beautiful. And then we went to a turtle reserve, and we saw turtles laying eggs in the night and then going back to the sea. And while they were going back to the sea, there was bioluminescence, which was glowing the entire coastline.
You've painted such a beautiful picture. And hopefully our listeners and viewers are going to put this on their bucket list. But I want you to also take them through a few tips and tricks, because it seems like you've gone to so many places on a budget and you managed to have amazing experiences. So it's not like you have to spend a lot of money. You can have those experiences.
Yes.
What travel hacks would you suggest?
Okay, so two of my favorite tips are, firstly, you should always maximize on your loyalty programs and your airline loyalty programs, hotel and airline loyalty programs, and credit card points. So I'm very efficient when it comes to getting all the loyalties, all the credit cards. And believe it or not, one of the advantages of being a part of an airline loyalty program is that you can get upgrades for free. So not a lot of people know this, but this year I got two times I got a first class upgrade on a flight, just because I was a part of a loyalty program. And most of the times, if they have free seats, what they'll do is they'll upgrade you to a better class, and they'll mostly prefer people who already are a part of the loyalty program.
Right.
So I got it for Emirates and Air India this year, and both times, just because I had I'm guessing, or that's my best guess, that if you have a loyalty program, you are preferred over other people to get it. So that is tip number one: always join loyalty programs. And if you're anyway going to take a flight, might as well just get points for it.
Yes.
And not only through the loyalty programs, also through your credit cards, because a lot of your credit cards will give you a miles transfer option also. So if you accumulate your credit card points on any of your credit cards, especially if they're good ones and if they accrue the points really fast or efficiently, you can just utilize all of your spendings which you're anyway going to spend. If you're spending, let's say, a certain amount every month, let's say your budget per month for running your chores or household is 30,000. If you can accrue the points for that on your credit card and make all of your spending on that, by the end of the year, you're going to have a sizable chunk of points on your credit card, which you can just redeem against free hotels, free airlines. So why wouldn't you want to do that?
It's a great point. And this is definitely useful information. Thanks so much, Tanya, for painting that picture for us. Now we have to get into how to check those off our bucket lists, and my next guest is going to do that. Thanks once again for joining.
Thank you so much. It was a pleasure.
Hopefully at this point we've given you some good ideas of what to put on your bucket list. Now let's talk about how you can check those off. Joining me now is Kirtan Shah, the founder and chief executive officer of Credence Wealth. Kirtan, thanks so much for joining me. Kirtan, we've had some amazing destinations spoken about on this program already, but there are so many that you can do. The thing that I've noticed is that a lot of people either don't travel at all and aspire to, but never end up doing it, or they spend too much on travel and entertainment. Is there a middle ground that is more pragmatic?
I think, Alex, this is a brilliant question that I really want to answer through this show. I think if you don't travel, you are missing out on a lot. You don't really want to be in a situation where you want to die rich.
Yes.
Right? What's the whole point of having so much of money when you retire, but your health does not really support you to travel? I would definitely not want to be in that situation or a position at all.
So don't push your travel all the way down to when you're 60.
Absolutely not, because you might have the money, but you might not have the body to support you to do the travel, right? I am somebody who believes that if you are making money, live in the present, enjoy. Of course, don't be a spendthrift, but at the same time, you don't really want to take away the spice from life and only keep working. Won't solve any problem, in my opinion.
Okay, so that sets the context for the rest of this conversation as well, because I think if you're traveling abroad, one of the factors that you need to bear in mind, and I was thinking about what we could speak about, it's a fact that we've seen the rupee depreciate quite significantly. And so if you're talking about expenses that are denominated in euro, or you're talking about denominated in dollar or anything like that, then your costs are going to go up every year. So do you plan for that?
Alex, 100%. Like theoretically, both of us know that probably the rupee depreciates 3% year after year for the longest time that we've known of. But I'll tell you, travel planning is very different from planning for a child's education, which is going to be 10, 12 years later.
Yes.
In my opinion, travel planning is a very short-term planning.
Yes.
And you can't really set up an SIP for a travel plan because you would want to travel each year and not once in 5 years.
Yes.
Right? And hence, if it's a short-term plan and you want to bucket or save for something today, which you're going to do the next year, a 2-3% movement really won't make a lot of difference.
Okay.
But theoretically, the answer to your question is yes, that when the rupee depreciates, your travel is going to become expensive. But accounting for it is a little too stretched for a 1 year goal. Yes.
You don't have to take so much trouble, basically.
True.
But okay, let's club a couple of things, because I would think travel is part of your experiences. Entertainment should also be part of that. And so from that perspective, I know you said that making a fund simply for travel does not make sense, but would you have a large fund that you set aside for experiences per se?
100%. I think when I answered your first question, I said I don't want to die rich.
Yes.
Right? So we make it a point that as a family, we end up actually spending 5-10% of our annual income in the entertainment bucket.
Okay.
Because I think out of all the money that we make, if we don't spend this much for our leisure, what's the point of making that kind of money?
Yeah.
So whatever SIPs that we actually do every year, I think 5-10% of that money is actually intended to be spent over entertainment.
Okay.
Right. So that's the kind of budget that we personally have to spend.
So you don't have a separate fund per se, but you will take from your surplus and you will take some portion from what you've set aside for the long term. Is that fair?
Yes, because like I said, that travel for me is not a one-time thing where I'm planning to roam the world 5 years from today, right?
Yeah.
And hence, because it's a yearly engagement, I am typically adding or clubbing that to the normal SIPs that I keep doing and removing 10% of my annual income as a spend every year from the total fund that I have towards my travel. But when I'm setting up an SIP, the objective of that SIP, one part of that is definitely that I want to keep accumulating it so that I can withdraw.
And no one's saying that you have to go for that 3 lakh right now. If you are earning 12 lakh or if you're earning 6 lakh, you can do the same thing and you can level up over the course of your career.
Absolutely. I think all of us, and I think I would really like to thank COVID for this. People have really realized that you don't really want to save everything for
a rainy day.
Right? That rainy day may not ever come, right? So I think I'm very happy that people, especially the younger lot, has taken this up on themselves, that they really want to enjoy the money that they make and not only keep saving it for the rainy day, like we said.
Okay, so a couple of things from the planning perspective. Now we've established that you can actually take from your surplus and you can plan accordingly. But something that you don't talk about very often is travel insurance, and I think for good reason, because you're planning your itinerary not for something to go wrong on your trip. But how important in your opinion is that?
Extremely important. I can tell you a story which is a month back. I was in the US. I developed something called as shingles. Shingles are nothing but
it's a deficiency, right?
No. So anybody who's got chickenpox, in the future, that virus is always in your body and something will trigger and then you might get that back.
Wow.
Right?
Okay.
Not going too much into the
details.
So I developed shingles in the US on my trip, and a 5-minute consultation costed me $3,600 in the US.
Oh my God.
Now imagine if you don't have an insurance, what can happen in such a case? And I'll tell you, a $25,000 medical policy was just $2,500 rupees. I think that's hardly anything for you to not have an insurance for. And especially when you are in a foreign country, you have absolutely no idea of the medical system. And I can tell you the medical system in the US is broken and how.
Yeah.
Right? You don't really want to be caught between not knowing what to do next and in a country that you have absolutely no idea about. I think medical insurance is sacrosanct, and that is something that you should not miss on.
Okay. So that's very clear. And so therefore, when you're planning a long trip in particular, you must do it, particularly if you're going to Europe, I think, and to places that have costly healthcare, right? The other thing I wanted to ask is, you transact obviously in whatever currency in the place that you go to. And so from that perspective, what is the ideal way to do this? Of course, the options available to you right now are significant.
I think, Alex, because I'm an avid traveler, I'll tell you, credit cards do a much better job.
Yes.
Right? Because they are safe, they are convenient. You don't have to bother about carrying currencies and all. And specifically, there are two very large costs, right? Let's say if I'm going to Vietnam and I want dongs. Typically what you do is you first convert your rupee into dollar, where you pay a currency conversion cost, and then you pay another currency conversion cost when you put or convert your dollars into dong.
Yes.
Right? Versus that, again, depends on which card are you really using, but the cost is significantly lower.
You're paying the merchant fee.
Yes, significantly lower when you use the card, right? So your cost is lower on foreign currency transactions and your conversion on both accounts, right? So I am somebody, because of the kind of cards that I use, I find it extremely comfortable and cheap to use my card than, kind of converting my rupee into multiple currencies.
And if you're a little wary of using your credit card, you can always set limits,
100%.
Especially for international transactions as well.
Oh, absolutely. Right? You can do that. And plus, at the same time, there are a lot of benefits Of course, you may use your card for lounge access and various other things in general also, but I think that's a great plus. You can set off a lot of points that you've collected over a period of time to do hotel bookings or something like that when you are traveling. I think prudently using your card is a blessing for sure.
Absolutely. I think we've covered some important bases. Kirtan, thanks so much for joining me on MoneyWise.
Always a pleasure. Thank you so much for having me.
And that brings us to the end of this edition of MoneyWise. Let us know what you think in the comment section and stay tuned for a lot more. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered.
Hello and welcome. Thanks for tuning in. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Quickly on to where we are on the Nifty. An hour from close, an hour and a half from close. Largely flat. We've been range bound in that sense. Just about 130 points. Days high, days low. we're smack in the middle of that 130 point band in which the Nifty is trading in. Let's pull up the Nifty Bank as well, try and get perspective. Of course, while the speech was on, we clocked the day's low, both in terms of the Nifty and the Nifty Bank, after which we've seen a bit of a rebound, some positivity with regard to, for banks in particular, with regard to no rate cut to some extent. Also, the fact that CRR has been cut, which means that there will be more system liquidity available and deposit rates will likely come off. And that's why the reaction on the banking counters especially. But that's how it's essentially playing out. The Nifty Bank too trading in a bit of a range, just about 600 to 700 points in that sense. Let's also pull up the heat map with regard to sectors, get a sense of which sectors are not doing as well. And IT is that one pocket which is not doing as well today. After, of course, what was a very strong move yesterday, Nifty Realty also largely tepid. Pharma flat, banking flat, we spoke about banking. But what's doing well is metals, auto doing very well in trade today. You also have something like a PSU bank, 0.5% odd higher. Again, one of those sectors which didn't do as well or did pretty much nothing in trade yesterday, the Nifty PSU bank, participating in trade today. So that's how it's really shaping up. Let's pull up the advanced decline before we go to broader markets. That's how the advanced decline is shaping up. And the Nifty mid cap and small cap, we can pull that up. Essentially, broader markets outperforming the Nifty for sure. So around 0.4% higher on the Nifty mid cap. And after, that little bit of volatility at the start of the day, you can see that kind of somewhere seen more stability towards the latter half. At least that's how it's playing out as we speak. But the band is narrow nonetheless, 200 point band on the Nifty small cap as well. Last off, I want to pull up the BSE 500 top gainers, top losers. Some names over there to focus in on. And ITI is doing very, very well. PV Fintech is up and away. Delivery is doing well as well. MCX is up 8% odd. Borosil Renewables up 5%. Additional duty, of course, aiding Borosil Renewables last couple of days. You have what's not doing well. You have an M&M Finance, a 5-star, not doing well. You have an HEG, some bit of profit booking was there yesterday as well as today now. Canfin is down 3.7, and you also have something like a CAMS which is down 3% odd. But that's how essentially the day is shaping up. Neeraj.
Yes, indeed. Let's focus on what to do in a scenario like this, or with the technical and the fundamental view. Ruchit Jain, Johnson, to talk about the tech side of the market. Narendra Solanki of Anand Rathi on the fundamentals. Gentlemen, both of you, thanks for joining in. Ruchit, how do you observe trade today? It's kind of flat, but the PSU banking pack is still active. How does one place trades?
Yeah, hi, very good afternoon, Neeraj. Very good afternoon to everyone. Well, last few days we have seen a decent pullback move in the indices, and Nifty is right now hovering near that 50% retracement mark of the entire corrective phase. And that retracement is around 24,770 to 24,800. We witnessed a breakout above that in the previous session yesterday, but we have not seen a firm closing above that 24,800 yet. So I think we might enter some sort of time-wise corrective phase where the index would continue to consolidate within the range, and there would be more of a stock-specific action which would go on for next few days. So 24,800 is the important level that we are watching out for on the index front. If that is taken out, then we can expect an up move towards 25,120 in the near term. Until then, I think 24,800, 24,500, this is the range where some time-wise correction would be seen. So I think the broader markets definitely has been doing well. So taking a stock-specific approach till that 24,800 is not taking out. I think that should be the approach to trade in these markets.
Okay. So do you trade, would you initiate a trade on any of the indices right now, Ruchit, at this moment?
No, frankly, I would wait for a breakout about 24,800 on the Nifty. And once that breakout is done, then I would recommend initiating longs for targets around 25,120.
Bank Nifty.
Yeah, so Bank Nifty relatively, I think, has been doing better because we have seen a consolidation breakout of last couple of months sideways range which was there. But in last 4 trading sessions already, it has rallied from that 52,500 to 53,600. So I think here a buy and dip approach would be a better trade setup. because the momentum readings on the lower time frame chart are a bit overbought. So if we get any kind of dips towards that 53,000 mark, then the stop losses would be smaller. So around 53,000, if we get 53,000, 53,100 range, that should be used as a buying opportunity with stop below 52,800. And positionally, I think 54,000 would be seen on the Bank Nifty index.
Okay. So that's the view coming through on the technical side. And Narendra, let me quickly take your views on the fundamental side of things. First off, outside of the policy that we heard today, in general, give us your view on the index itself. How are you positioned and how do you believe the index is placed?
Yeah, see, at this moment, I think the market has already priced in all of the negatives, plus the event has also been out of the way. So after around 1,500 kind of point of rally for the Nifty, I think the markets are placed evenly on both the sides, and we don't see any runaway kind of a rally. It's a stock specific kind of a market. Also, we don't also see any sharp downside as well. So we might see a range bound 1 to 2% kind of a range either side, at least for this month. And even after 2 weeks, the FIs would also be going on a long holiday after 20th. So only I think 10 trading days are there. So post that, I think the market volumes would also be very stagnant from foreign flows point of view. So don't see much of volatility in this month. And then maybe from mid-Jan onwards, we might see market taking some more direction as we also have some fast-moving data on macroeconomic also coming out. That would also give a direction in terms of how the consumption has been doing in this market, especially post Q2 results, wherein we have seen some decline or some slowness in urban consumption. So with that kind of data coming in from mid-January onwards, we see that market would take another rational look around that time.
Narendra, so how do you pick in this market? What is it that you are looking or finding interesting?
We are positive on cyclicals, manufacturing, and rate sensitives. Especially, we are focusing on rural kind of a picks, especially in two-wheelers and in four-wheeler passenger vehicles. We are focusing on companies like M&M, which are having rural presence as well in terms of tractors as agri inputs. So that kind of pick. Plus, in manufacturing, we are positive on capital goods, engineering kind of a space where a lot of things again would start to happen when new administration comes back in the United States. So China plus one would again start taking steam. So that would also benefit some Indian companies, as in the import substitution as well as the larger share in exports would also be beneficial for our manufacturing companies. So this is how we are trying to play.
Okay, Ruchit, your picks this afternoon?
Yeah, so a couple of buy recommendations. First would be buy call in Exide Industries. This stock we have seen that post the recent correction has formed a bullish hammer pattern on the monthly chart. And even if you look at the price volume action, the kind of volumes the stock has seen in last few trading sessions, rising volumes along with the price up move indicates that the stock could do well in the near term. So short-term traders can look for buying opportunities at current market price in Exide with stop below 448 for potential targets around 490 to 500. And on cash market stock, Narayana Hrudayalaya, NH is looking quite interesting over here. Last 1 month, the stock has seen some consolidation phase, but this entire consolidation has been done above its 200 DMA. And the stock is on the verge of a breakout from this consolidation. Volumes during this week, if we see, then they are better than the average. And if we get a breakout in the stock, then we could see some good momentum in the short term. So NH1 can look to buy with stop loss below 1270 for potential targets of 1415.
Okay, so those are the picks for Ruchit this afternoon. Let's quickly switch focus though. Very interesting note coming in from Nuvama. They've maintained their buy rating on Zentech. They've revised the target price indicating a 16% upside. Varsha joining us with the details. Varsha, break this down for us.
Yes, Harsh. So the main focus is for this note is about Zentech, which has signed an MOU with Florida-based AVT Simulation to enter into US defense market. Now, this will expand its serviceable market in simulation training and anti-drone system. Now, the partnership combines Zentech's anti-drone expertise with AVT's aviation simulation technology, addressing modern warfare challenges like countered UAS solution. If I were to talk about the order inflow, so Zentech experienced a muted order inflow in H1 FY25. A significant uptick in orders in H2 FY25 is crucial for meeting its aggressive revenue and PAT targets. So Zentech aims at 50% of revenue CAGR with 35% of operating profit margins and 25% of PAT margins over the next 2 to 3 years. Lastly, if you see, the company is broadening its presence in North America with including US and Argentina as well.
Okay. Let me come to Ruchit first. Ruchit, on the technical front, how does Zentech look? 1.5% higher. Of course, Nuvama constructive.
The stock is an uptrend, but frankly, the risk reward is not that much favorable over here. If you look at the month of August, the stock has resisted around the 2000 mark. Today also intraday it crossed the 2000 mark, which is not able to give a closing above that. So the trend is positive, but I believe that either one should wait for a close above 2000, so that the next leg of a move starts and a confirmation would be there, or any kind of dip towards 1700 if comes first. Then the risk reward ratio could become favorable to do some bottom fishing over there. So I won't recommend going long at current levels, but maybe a buy and dip strategy would be a better approach to buy this one.
The thing, Narendra, I wonder if you like any of the defense names, or particularly Zentech as well, if you have a view here, because now there are a couple of transactions that have happened post the QIP, and the promoter sale also has been digested.
Yes, as far as Zentech is concerned, we don't have any coverage on this stock, but definitely as a theme, we definitely like defense stock, and especially in defense, we like to more focus on ancillary plays rather than platform plays, because there is a lot of competition and the order books are very slow, especially if you are a platform player. So in ancillaries, we like KN's Technologies, Data Patterns kind of plays, and Bharat Electronics kind of plays.
Okay. Fine. The main event, Neeraj, today was the RBI monetary policy that the governor came out and gave his statement. On the disappointment side of things, of course, growth shrink, increase in inflation, bit of a concern. But just to give due credit to Nomura, because yesterday they came out with a marquee note, and in that note they had predicted exactly this: inflation of 4.8 and growth of 6.5.
But they said rate trajectory wrong.
They said that's correct. Yes, so they got the repo rate wrong, which was of course the key. But outside of that, they got these 2 points right, and clearly both of those disappointments, to a large extent, have played out in this MPC itself. But the CRR cut, which is the interesting piece, because it will infuse a much needed bit of liquidity in the system. It will inject that, and what it will also do is it will likely cause deposit rates to fall, at least on the short term side of things. What it will also do is that it will improve therefore margins for banks. Bank margins, according to Citi, will improve by around 2 to 3 basis points. Effective Q4 FY25, because the rate will get cut over a period of a couple of fortnights, and therefore by end of December that entire rate pass through will happen, and therefore you will have the impact of margins only coming through in Q4. But 2 to 3 basis points roughly is the impact. 1.16 lakh crore within the system getting freed up likely will push growth, so that's one impact parameter, and the other piece is of course margins. 1.16 lakh crore currently earning zero for the banking system will start earning a little bit more in terms at the very least, even if it's parked in government securities or a simple fund, and therefore likely will optimize margins for banks, and therefore that move on banking counters. But Neeraj, just quickly having your take, what really stood out for you
No, just this. I think they opened the door for a Feb rate cut, right? With the inflation numbers given for the Q1, Q2, Q3 of 2025. So I think, and maybe which is why, aside of the CRR cut, I think there's expectation that now maybe Feb cut is definitely here. This probably helps the PSU banks for sure. In fact, on that note, Harsh, let's hear out what Rajiv Anand had to say, Axis Bank's deputy MD. He said that the CRR cut will have a positive impact on banks, margins of about 3 to 5 basis points from Q4 FY25. Listen in.
The 1.15 lakh crores was earning the banks nothing because it was impounded as CRR. Now that it is being released, at the very least, we can actually go out and put this money in overnight liquidity at 6.5%. Obviously, what banks would do with this money is they would put this money into a mix of corporate lending, retail lending, including unsecured, and so therefore this CRR cut will positively impact NIMs of banks by somewhere between 3 to 5 basis points. Not in this quarter, but because the CRR is being released in 2 tranches in 2 fortnights, the impact will come from the next quarter onwards.
Okay, so Rajiv and the Axis view seems to be that it's going to be 3 to 5, but could be either 2 to 3, 3 to 5. So roughly 2 to 5 basis points in terms of NIM is what the impact is going to be. The major companies which are banks which will get impacted or which will benefit from this, PNB, roughly 2% of operating profit is what this cut will add to it. SBI around 1.5%, Bob around again 1.2 odd percent, Federal Bank 1.2%, HDFC and Axis around 0.8 odd percent of operating profit impact. Of course, NII as well, those numbers on your screen just for a quick viewpoint. But that's of course on the side of what Citibank's views are or what Citi's views are with regard to this entire play. Narendra, I'm curious to know your views. What do you feel will be the impact, or how would you play this going forward if you were a market participant or an investor?
Yeah, I think it's overall net positive for the banking system. As we have been seeing since past couple of months, that banks have been struggling to match the credit growth with their deposits, and the deposits they were facing pressure. So there is some relief from that point, and that will definitely trickle down to the margins. And coming to the Jan to March quarter, I think usually there has been drain on the liquidity for the banks. So this is much needed cushion for the banks, especially ahead of the Q4, and since the rate cut was not announced, so this is a much needed cushion for the banks. Plus, we have seen that first half of the economy has not grown so much, so we have also seen some drag from the government spending as well. So this would help in terms of transitioning from that period in the short term. Overall, and now in H2 we see that the government capex coming back gradually, and we have seen in November some capex have been picking up. So I think this is a much needed cushion for banks to transition in the short term, and it will definitely help in the credit growth of the overall system.
In terms of NBFCs, you believe that it'll obviously impact NBFCs, but just your view on which is the best play there in terms of who will benefit the most right off the bat?
I think NBFCs have been struggling, have a different problem. They have been struggling with the quality of their books, some of the NBFCs, especially in unsecured lending. So we have to see how things plays out from that point in time. However, coming to the specific NBFC players, we would prefer NBFCs who are more into home loans and consumer loans. So that would be faring much better than others.
Okay. Let's though switch focus. Renowned historian and philosopher Yuval Noah Harari is in India to launch his new book titled Nexus: a brief history of information networks from the Stone Age to AI. Tamanna Inamdar caught up with Harari and discussed what he calls the unprecedented challenges and opportunities posed by artificial intelligence. Here's a short version of that chat.
I'm a historian, but my view of history is that history is not the study of the past. History is the study of change, of how things change. And history is more relevant than ever before because we are in the midst of the biggest change ever in human history, the AI revolution. AI is really different from everything we've seen before in history because it's the first technology which is not a tool, it is an agent. Now, every previous human invention, when people invented the stone knife or the wheel or the printing press or the atom bomb, this was inventing another tool that makes us more powerful. Now we can do this, now we can do this. AI is not a tool. It is itself an agent, which means it can make decisions by itself, it can invent new ideas by itself. An atom bomb could not decide what to bomb. An AI weapon can by itself decide what to bomb, who to kill. An atom bomb could not invent the next generation of bombs. Like the atom bomb could not invent the hydrogen bomb. AI can invent new things, including the next generation of AI. So we are now creating something which might be potentially more intelligent than us, that might escape our control and start making decisions about us and changing the world in a way that we don't understand. You know, it's already beginning in so many different ways, like you apply to a bank to get a loan. Previously, it was only human beings who could decide whether to give you a loan or not. Now, increasingly in many banks, it is an AI deciding whether to give you a loan or not. And this will happen more and more in universities, in government offices. People sometimes have this science fiction idea that the danger of AI is the big robot rebellion, like one day the AIs will try to take over the world. It's unlikely to happen. The real threat is that we will have millions and billions of AIs, these new super intelligent agents everywhere, as AI bureaucrats in the banks, in the hospitals, in the government offices, in the militaries, making more and more decisions about us, changing the world with new ideas that we cannot understand, and we will lose control over our lives and over the future.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Well, back with India market close right here on NDTV Profit, and if you just take a quick look at what the heat map is suggesting, it's absolutely flat by the way for the benchmarks, including the bank Nifty, but the heat map will give a good depiction of what stocks are moving. Now remember, it's even Stevens, and autos have a bit of a spurt to themselves today. So if you look at Bajaj Auto, Tata Motors, or a Maruti, kind of staying afloat and doing okay. So that's part one. There is strength in Mahindra and Mahindra as well. So that's the auto bucket which is holding out. Larsen and Toubro and Axis Bank amongst others, non-auto, which have held out. And on the losing side, Cipla, Adani Ports, Airtel. These are the top three. And then a little bit of heavyweight participation in Infosys as well as Reliance Industries. But stocks which have moved the most, and just the top three, and the kind of moves that have made not just today but over the last 3, 6, 12 months. So ITI, big mover today, right? 14% higher, not done too much in the last 12 months. As you can see, 14% over the last 9 months, which includes the 14% gain today. So very flat over the last 9 months, but doing well today. Rain Industries is the other one, which has actually had a good move, but again, not done too much in the recent past. So is this just the starting of the move? That's the question. The third top gainer is Borosil Renewables because of the duty, the countervailing duty put in, 7% higher. Again, not something that has really participated in the recent past, but moving today. So today's gainers are actually a bit of breakout moves from lows. What has not done well, a bit of a pullback for HEG. Remember, Graphite India had a pullback yesterday. So this is one. And then Poly Medicure, a little bit of sulk today, nothing too dramatic. So watch out for this as well. Last but not the least, and this is of course Canfin, but last but not the least, two stocks, both of which have moved because of an order win to one, which is Kernex Micro. So Kernex itself is up about 5%, if I'm not wrong, should come up on your screen. Big move there, post the order win. Look at that, 5% higher. But on the back of this, HBL Power has actually gained nearly 10%, because I think the street believes that what's come for Kernex in terms of Kavach orders will actually go to some of the others as well. Look at this move, 10.5% for this one. So good going for a clutch of mid-cap names, but broadly, Tamanna and Harsh lying absolutely flat today, the benchmark indices.
Yeah, and I just want to, mark out some stocks as well. Start from where Neeraj finished off. Let's pull up some platform companies. Paytm, PB Fintech. If we can also pull out something like a delivery, not per se platform, but to some extent new age, seeing some good buzz. Okay, so Paytm 1.7, it's off those highs for sure, but 6% higher on delivery. And PB Fintech also, I believe, 5% plus higher. There you go, 6% higher on PB Fintech as well. We're very close to the day's high. Ruchit, I want to take a quick check from you. Any of these on your list, and do these look interesting to you, or what are the levels you look out for?
I think within this name, clearly, Policy Bazaar is one stock which is standing out. Even Paytm has done well off late. At Policy Bazaar, I think the stock, the chart structure still looks much stronger, because the recent consolidation, we have not seen the stock going below its 100 EMA, and now the high bottom structure has been resumed with very good volumes. Positionally, if I take retracements of the recent correction, then it gives a possible targets around 2400 kind of levels. So I think still good amount of room left for Policy Bazaar, so the uptrend could continue over there.
All right. That's the story with PB Fintech. But I think we should take a fresh check really on the indices as well. Hi, Ruchit. Good afternoon. Tamanna here. And, with the kind of volatility we've seen, obviously big bump up in the middle of the day after the RBI governor's address, and when clarity came in on the CRR cut, and then you're flattening out completely. What is the kind of position you would take to set up for the next week? Where would you be sitting right now? Would you be going long?
Yeah, very good afternoon, Tamanna. In the markets, we've already seen a pullback move ahead of the event, what we have seen in last couple of weeks. Now we are trading, interestingly, near that 50% retracement mark of this entire correction that we have seen in October and November, and that is around 24,800. So we are waiting for a breakout about 24,800. Possibly, then only I think it would be prudent to take fresh long positions on the index, because once that level 50% retracement level is broken, then it would get open up for 61.8%, which is around 25,120. So I think here we expect some sort of consolidation to get in the indices, and rather more stock specific approach. Keeping a stock specific approach should be a better strategy.
Okay, thanks for that, Ruchit. We'll let you go on that note. Jay, let me welcome Jay Bala, joining us, founder and chief market technician, Cash the Chaos. Jay, quick take on how you're viewing markets at this point. And as Tamanna, I'm not sure if you had a chance to listen to that question, but put it across to Ruchit as well. How are you setting up for next week?
Hi, good to be here. Thanks for having me on the show. I think, I indicated a few weeks ago that the market's bounce from 23,264 is a counter-trend bounce, and anticipated it to come to somewhere close to 24,400 to 24,800. The market has come to 24,850. I think this was very close to an end of a counter-trend bounce. So to your question, a direct answer to that, I'm setting up to watch for a break of support to short the market. So not yet short, but waiting for the support to break down.
All right. Narendra Solanki also with us this afternoon. Narendra Solanki, great to have you on.
Just want to get your sense on the BFSI play right now. In this time of uncertainty, now that we are clear what kind of a path we are moving towards as far as interest rates are concerned, the CRR direction also coming in very clear. Would there be any big bet that you would look at right now?
Yeah, good afternoon. Yeah, definitely. I think with today's policy decision, the path is clear that in 2025 we are going to see rate cuts, and the pace and the amount is yet to be seen. But definitely the path is clear. And with this, I think overall, if you see the two broad pockets, one is PSUs and one is private banks. So for PSUs, I think the ROAs have already been, we have seen that it is already at its peak and maybe peaking. So now the play remains is that how long, what kind of margins they are going to see going forward. So I think the overall recovery would be continue to remain strong for the PSUs. ROAs have maybe peaking or have already peaked out. So the much strength would be on NIM. So I think NIM should still hold at least for a quarter or so for PSU banks. So the PSU banks will continue to remain one of the favorites among the banking space for us. In private banks, I would go with the Axis Bank, especially it's trading at a lower end in terms of price to book, which is almost trading below around I think 1.5 times or something, 1.6 times 1 year forward, which is really amongst other banks is lowest. And I think the kind of recovery it is expected to show in the next 2 quarters is very really good. So I'd like to go with Axis Bank in terms of private banks, and would like to avoid NBFCs as a general, but would like to go with home finance companies. So Chola, we like the play, and that stock continues to remain in our list. So these are the stocks in which we would like to have position.
Okay. Well, I'm just trying to look at stocks which are really flying today, and liquor companies right up there. So Tilak Nagar Industries is up 11%. Allied Blenders is up about 4.5%. I remember when Allied Blenders spoke to us guys about this was 4 days ago. The stock was at made 320, and he spoke about how he believed that the growth will be 12 to 15% at the very least for the next few years, and then newer products could actually aid growth, move higher than that, newer products, better numbers, etc. Look at that stock as well, from 320 to 365, really strong show. I wonder if Global Spirits and the likes also, Piccadilly Agro for example, I don't know if that one has also done well, but certainly liquor companies seem to be doing okay. Jay, good afternoon, and I wonder if any of these liquor companies have caught your attention.
Yeah, the relatively new listing of Allied Blenders, it's looked quite interesting and the momentum is quite strong. I think it's due for fresh all-time high. I think it's unlikely to pull back to something like 345, anticipating fresh 2-week highs past 380 to 400. The momentum is quite strong.
Okay, well, so that's some of the liquor names which are up and active in trade today. Jay, did we get your ideas in? I don't think we have. So could you give us your stock recommendations for the afternoon?
Yeah, I have two short calls. One is a conditional short, one is a straightforward short. One is L&T Technologies. It's been an underperformer, and from 6,000 it dropped to the recent low in October in a five-step fashion, which we call as a trending move. And after that, it's pulled back to the recent highs, which is very close to the Fibonacci retracement of 61.8 level. And hence, a stop loss at about 55.50 with a price objective of 4,600 for the stock. And the second is a conditional short on Coromandel Fertilizers, or Coromandel International it's called. If it breaks the level of 1745, that will trigger the short level for this. It'll probably complete a top from the 2023 low. And hence, we are being a bit conservative. If it breaks 1745, anticipated the stock to drop somewhere close to 1500, and maybe a bit deeper too. But we'll keep it conservative. Wait for the 1745 to break, and then activate this.
All right, let's just take a look at Newgen Software. Newgen has gained considerably in trade today after Jefferies came out with a positive outlook on the stock. Why is Jefferies so constructive on Newgen? Let's listen in.
So Jefferies has come out with a note on Newgen Software after the meeting takeaways. Well, it has maintained a buy rating on the stock with a target price of 1500, implying an upside of about 15%. Now it says that management highlighted strong growth outlook in the coming quarters, and Jefferies therefore believes that strong recent bookings can provide comfort to the revenue growth, and they also believe that there is scope of margin improvement, especially in FY25 to 27, wherein they expect the margins to be at around 25% during that time. It continues to step up its action to gain traction in the US is what Jefferies believes in terms of Newgen Software. Therefore, it values the company at 42 times its PE ratio, and the PEG, that is PE by growth, comes at about 1.5 times. Now, let's look at the share price. The share price surged in trade today, but if we look at the one-year performance, 90% returns in last 1 year, and in last 6 months, it is up by almost 54%. But when we look at the analysts covering this stock on the street, we see that there is a bullish stance over here with 5 buy calls and 3 hold calls, and return potential of around 5% based on the consensus target price. Back to you.
Okay, so Newgen Software in focus. Jay, I'm wondering if you're tracking the stock at all?
Yeah, I've been bullish on Midcap IT names since October 2022, and it's been the Midcap that's been outperforming the frontline names. And Newgen in particular, it's come up from 230 odds in 2023 to some 1300, 1400 now. It's still got one more sequence of higher high to come through, but that will probably be the final high that started from 2022 October low. And so the price objective for this move is somewhere about 1660 to 1700. So still bullish on it, but it's a bit late.
Okay, so up to 1700 is your target price. Is there a stop loss?
I think stop loss about 1150 is the stop loss for this.
1150.
That's correct. Yeah.
Okay. So now you talked about Midcap IT. How are you feeling about a Sonata, and how are you feeling about a Persistent on the charts?
Yeah, Persistent again. Persistent, again, I've been bullish on it since October 2022, and it's Persistent, Coforge, and Newgen. Those types are still bullish, but they're all on their very last stretch. So it's all quite late. And if TCS and Infosys, which are weaker than the mid-cap names, if they start to turn down, I think that will start trickling down into mid-cap name too. So, to a specific question on Sonata Software, not that good looking, but, Persistent and Coforge, they still have a little bit juice left, but it's all quite late in the day. So be very careful, have very tight stops on the mid-cap IT names, and Sonata Software is an avoid for me.
Okay, I wonder what's happening in some of the QSR names as well. And some of them really buzzing in trade today. Let me pull out a few of them. Let's look at Westlife up 2%. Now Westlife is on the back of a Goldman Sachs note as well. 30% upside is what they expect to see. And before I go on the fundamental side of things, let me just take a technical check. Devyani is up 4% and Jubilant is up nearly 5%. So some of them really zooming in trade today. And in fact, at the day's high as we speak. Jay, let me come to you with regard to some of these names. What do you reckon is happening here?
Yeah, Devyani, or you're looking at...
Devyani, Jubilant, the whole pack, Jay, is buzzing. Yeah. So Westlife, Devyani, Jubi, all of them up, anything between 2.5 to 4.
Jubilant, I would believe that's the best from the space, and Devyani is an avoid. Devyani, Jubilant, it's got very strong momentum. I'm very sure it's going to clock fresh 52-week highs, somewhere close to 800. A stop loss is about 640 from current levels. That will be the trailing stop, actually. So the best of the order is probably Jubilant at current levels.
Right. Also, just in terms of Westlife, want to try and cover that note which I was talking about. Goldman Sachs, constructive, believes that H2 will be a much productive quarter, mid-single-digit growth, but they will stand out is what they've suggested in terms of management commentary to Goldman Sachs. Goldman Sachs building in a target price of 1,045, no change in target price per se, but a 30% upside is what they're penciling in. 2% of that already getting bought into today. And, just in terms of operating leverage kick through, same store sales growth. These are two things which many analysts are going to be tracking going into H2. Will be very crucial to see whether McDonald's or Westlife Food World is going to do in this regard. Narendra, let me come to you with regard to this one. As well as the larger QSR pack, consumption as a theme, in fact, has been something which a lot of analysts on the street are talking about and positive on. Your views with regard to consumption and QSR in particular, and any names that you like in this space?
Yeah, definitely consumption is a good thing to have and good stocks to have in your portfolio for long term. But right now, I think since the inflation was high and now it is being seen that the inflation is peaking out. So maybe the commodities, especially on the food items, the prices are going to stabilize and going down further. So that could add to the lower input costs for these kind of stocks. So that may have been the short-term thinking of the markets, which is driving the prices now. As far as companies is concerned, we don't have any stocks under QSR segment under our coverage, so I cannot. So maybe I'm not able to recommend for the long term. But I think the coming off of inflation gradually, and the overall rate cut scenario will be leading short term momentum in this space.
Okay, and Narendra, do you believe that overall QSR, would you say that there is a case to suggest that there could be a recovery, and what would that case be in your view?
I think if we're looking at the latest Q2 results, you have to see how the urban consumption space is behaving. So we have seen that urban consumption has slowed down in Q2, which is likely to pick up by Q4. But still, we would like to wait and watch and see what kind of trends, especially the urban consumption, shows us. And since the QSR is mainly about urban consumption, so we have to still see how things evolves around that. So I think from our side, it is better to wait and watch and see how the urban consumption shapes up, because right now there are some divergence trends, and which is still not clear how it is developing. So I think we have to. It's better to wait and watch and then assess.
All right. Thank you so much, Mr. Solanki. Great to speak with you today. Stay on with us, Jay. We'll take a very quick break. We're coming right back with top ideas for this afternoon session. Stay tuned for all that and more.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead.
Back with India Market Close right here on NDTV Profit. A quick check on the markets and precious little really. IT's in fact come off at 0.26%. So from yesterday's best performing index to down about 0.27%. Nifty IT's had some issue. Volatility's come off as well. But the good part is that the broader end of the spectrum seems to be doing okay. If you look at the Nifty small cap 250, that index is up about 0.5%. Mid-caps too up about 0.47%. So good going at the broader end of the spectrum. And that's symptomatic in the way some individual stocks have moved on the back of news. One of them is Kernex Micro. Why is Kernex up 5% in trade? Anushi is joining us to tell us the latest on that stock. Anushi, good afternoon.
Hey, good afternoon, Neeraj. A significant order win is what has moved the stock in trade today. Now, if you look at Kernex, they've received an order worth about 2,041 crore by Chitranjan Locomotive Works. This pertains to supply, installation, testing and commissioning of 2,500 sets on board of Kavach equipment. That is what we are seeing. And this order is to be delivered by December 25. So, very short period of time, 1 year period of time we are looking at, and a significant order at the best that we we are speaking. Because if we look at the FY24 revenue of the company, that was at 20 crore, which was 5 times the growth. And even if you look at H1 FY25 performance, they had clocked in about 70 crore of revenue this quarter as compared to 2.37 crore. So 29 times of growth we are looking at in terms of revenue in the first half. EBITDA was also at 15.1 crore and margins at 21.6% of a range. Market cap of this company is around 1,900 crores. So just taking this kind of an order size into consideration is what is working out for the company for not just today, for even for the longer term as we speak. In fact, in their outlook forward, the company had mentioned in the previous conversation that they had with us around June and July that they expect to achieve about 700 to 800 crore of revenue this year and are expecting around 10,000 crore worth of tenders from the coverage side as we speak. There are 2 more players in this space which also includes the likes of HBL Power, one of the names being that. So even that is up in trade today. So definitely watch out would be on more of these coverage orders as we speak, and a significant order that Kernex is seeing today and why the stock is up in trade.
Okay. Thanks a lot for that. So, Anushi, just very quickly, you mentioned that the company is expecting 10,000 crores worth of orders. Is this the first of that, or has something else come in the recent past too for Kernex?
So if we look at the past in coverage, what we are seeing is that this essentially is one of the latest developments as we speak.
Okay.
So yeah, so the outlook would be on what the future would be, especially considering H2, which is more on the order heavier side for these kind of businesses.
Okay, Anushi. Thanks for putting that into perspective. Neeraj Devan, independent market expert with us on the show as well. Neeraj, I mean, it's a small bucket, but these companies, anybody which is winning these government orders or getting large orders are doing well, right? On the defense, on the railway side, we saw that happen with Solar Industries 3-4 days back. Large market cap, 2,000 crore export order did very well. Now, Kernex, small company, but a large 2,000 crore order doing well. It's already spurred some of the other potential Kavach order victors as well, the likes of HBL Power up in trade. Have you looked at this space at all?
Yeah, good afternoon. I think if you talk about Kernex, which had been buzzing because of this likely orders which will going to come their way, the stock is already close to 2,000 crore market cap without any revenue being coming so far. But now the orders have started coming and they can be huge orders. So maybe what is looking very expensive right now, will look moderately expensive if you're getting this kind of order, and somewhere down the line, if they get more orders, the company will not look that expensive. So there are a lot of potential opportunities like this in the market. Even HBL you mentioned, they also have one division which is into Kavach and railway security. So they also expecting good orders. So they have other businesses also which are doing considerably well for them. So I feel that wherever there is a likelihood and there's a visibility of order inflow, I think the stocks will remain at a premium. So, you may get some correction, may get some entry, but still that premium is inbuilt, whether it's railway related stock, whether it's defense related stock, whether it's electronic manufacturing services. There are segments where, these lumpy orders come, and some orders are for long period, like they can be for the next 3, 4, 5 years, which, it can make the valuation over a little longer term not that expensive. So I think there is growth, so you have to pay for the growth in some of these companies.
Okay. Another set of companies on our radar is oil and gas. Agam is joining us to tell us why Citi is looking at the space closely.
Well, Citi is positive on the oil and gas space, and at the moment what they are basing their positivity is on expectations that the GST Council could perhaps consider a proposal to bring City Gas Distribution Company specifically under their ambit. And the government lowering the excise on CNG is also something that could potentially be on the cards when it comes to the union budget on the 1st of February. Moreover, there's also an expectation in terms of sharp earnings recovery from OMCs through a healthy marketing margins. And because of this, we've had positive cues coming in from Citi when it comes to, the entire oil and gas space. So when it comes to your OMCs specifically, they see an upside of anywhere between 60% to 40% for HPCL, GAIL, IOCL, and even in terms of IGL and MGL, they are expecting an upside of 25 to 29% respectively. All in all, looking positively towards the sector.
Okay. Well, thanks a lot for that. And it's interesting that people think of a slightly longer term view given by Citi out here on IGL and MGL. They're saying that people who have a 6 to 12 month view, it promises to be a very good investment candidate, these two. Now, Jai Bala, you look at slightly longer term charts as well. These stocks have gotten a hit in the recent past because of regulatory moves. Have they, from a charts perspective, hit any kind of areas wherein you could maybe think that they've hit a bottom and they could bounce back, if not in the very short term, then in the slightly medium term?
Yeah, that's right, Neeraj. Not in the short term, but possibly in the medium term. And of that, Indraprastha Gas doesn't look good, but MGL might be slightly better off. Each of them have one more sequence of lower low to come through that got registered in November. So once that is done, we could see a bounce back come through, but we still have to evaluate if that will be a medium-term bounce back. But, on a slightly related note, I'm anticipating for the very short term, I'm anticipating Brent crude to drop below the September low. It's about $3 below the September low we saw in 2024. So that might give a little bit of tailwind for oil and gas names. But, the bad news is that
Jay, sorry, I missed it. Are you saying you are expecting crude prices to dip below a particular level?
Yeah, I'm expecting crude prices to drop below the September 2024 low. I'm anticipating it to drop about $3 below the September 2024 low.
Oh, okay.
So once that is done, it will be a very big bottom for Brent. But, this short-term drop that's anticipated to come through, that can give a little bit of, tailwinds for oil and gas companies.
So, City Gas